because the response is very welcoming. And I think it's going to happen besides the budget. Yeah, it's something different, but it's going to happen. That's a policy package we're expecting. In any case, we were not expecting that to be announced in the budget speech. So that's what we're working on, because that's important imperative for creating a component ecosystem and deepening the electronics manufacturing ecosystem.
Atul, just very quickly, I know while we didn't get too much in the PLI scheme, one expectation I believe from your industry was critical components. Something to come out on that. There was a little bit of noise in the industry that we could hear a PLI scheme on critical components. Are you disappointed? Is this a game changer of any sort? Okay, I think we've lost Mr. Lal, but we'll try and come back to him in a minute. Manish, why don't you take that? Not much on the PLI scheme. Are you surprised? Because this was a big bet and it's worked really well.
No, it's not a big bang thing. PLI is in terms of large amounts so far disbursed are very small.
It's only a couple of companies that have stood out.
Very few firms. No, so these interventions which worked in, of course, Korea, Japan. In India, it's very difficult to make these outright favors to large firms. There is a lot of backlash. So I think all of these will be small little tweaks. I think the big picture still, the stuff on the, if you bring down taxes, if you new manufacturing 15% tax.
See, that's not happened. The sunset clause was something that there was an extent.
Those are the big things, if you stay for long enough, you'll eventually get local money getting pumped into not necessarily only markets, but
I think Pranav might want to come in on this because we spoke about this, the sunset clause extension, which didn't happen.
In fact, we represented in certain, for FICCI, for example, that we should extend it for 5 years and give that 15% benefit. But the government seemed very clear during discussions that they were just not for it. And therefore, they are not going to extend it, was very clear. So the expectation was just not there, so far as I'm concerned.
Yeah.
The merit of having done it is very evident. But they were very clear that they were not going to do it.
Well, there was a counter argument to that as well. But A. Bala is joining us now, Vaditya Birla Sun Life AMC. Bala, welcome to the conversation. And we spoke about so many things pre-budget. We have the announcements now. Let's start with your first take.
A pretty decent budget, clearly addressing the various needs of the country, whether it is employment, skill development, rural economy, giving a booster to the SME sectors, and access to the finance through the expanding the SIDBI into every parts of the country to ensure that money is now actually going closer to the people who would be in need of funds. And last, of course, is the income tax, the change that they brought in terms of slabs, which is, of course, putting a slabs, which is basically giving more money in the hands of people. At the same time, above 15 lakh rupees, now 30% plus surcharge. Giving a lot of money in the hands of people, which again, essentially, more towards boosting the consumption. And capital gain tax change, of course, given the fact a lot of wealth has been created, a lot of money has been made, people are deeply in money the last few years, the 2.5% increase in capital gain tax may not be actually significantly denting the investors' sentiment, given the fact that you have to pay this only upon the selling, and second is it all depends upon if you hold it for 5 years, 2% per annum it comes to, which is not significantly higher amount for somebody to get worried about it. Clearly, I think the growth-oriented budget. And second is a futuristic, it's not futuristic, it's an action-oriented budget with a clear allocation that is being kept aside for every segment of the activities. And last, of course, least is, despite all these allocations that's increasing towards the two states where most of the people are thinking there will be populist budget, and each of these spending allocation that has come to these two states, whether it's Andhra Pradesh or Bihar, it is linked to the industrial activities pick up and special focus on tourism, improving the pilgrimage activities in these centers. All of them actually is more with the intention to increase the contribution from these states further to the economic growth. Therefore, I call it as a growth-oriented budget. And what is also very interesting is the fiscal deficit. They have maintained it, and also given a roadmap that even next year they're showing the confidence of maintaining about 4.5%, which essentially means one, growth will continue to be the driver, and tax collection improvement will continue to be the driver. At the same time, ensure the overall the numbers adds up to ensure that the fiscal deficit also is maintained. And last but not the least, given the where we are current account deficit, the balance of payments surplus they are running, giving a specific focus on export sectors, whether it is a diamond or jewelries or even the textile sectors. That's something which has been one of the expectation from people that the export sector should give some kind of booster through these the series of basic custom duty changes that they have brought in. I think clearly they have brought in some bit of focus on export sectors indirectly through through various changes that they brought in on the custom duty. That's why I feel it as a good budget and overall perspectives. Probably I would say 9 out of 10 and overall ranking.
Got it. Thanks, Bala, for that. And that's an important first take. Now, let's just drill it down to some specifics, because as you see the Nifty 50 gainers, there is FMCG, which has got this clear bent of an upside there. Some of the gold companies, Titan, etc., is doing well. Gold financiers are not doing well. Staffing companies are doing well. Ravi, individually, a lot of sectoral movers. Anything that is sustainable and something that stands out for you?
No, clearly, a lot of emphasis on creating formal jobs. And that is a direct beneficiary over there seems to be the staffing companies. There will be second order impacts of this also, of all this money being given to the interns, to the first time jobs, employees, and the lot of benefit even to the employer in terms of in the manufacturing sector. So that there will be a second order benefit of that on the consumption sector, but it's too difficult to say right now which sector. It's just that the job growth as well as the wage growth have been two problem areas, and I think government has clearly identified that and has laid an extra emphasis on reviving those.
So does this budget bring about a corrective move? You had mentioned that you don't know when what will lead to the correction, whether it's the budget or not. Now you heard the budget speech. Does the budget bring the correction?
Clearly, it seems so. I think correction probably started a couple of days back, and I think now it is getting elongated. And I think there will be a churn in the kind of companies that do well. Capex incrementally is not a needle mover anymore. Not to say that the focus on Capex is reduced or anything, but the stocks were kind of factoring in 3-4 years out. So the entire savings and the extra benefit from RBI has gone towards actually fiscal consolidation rather than towards giving extra impetus to the Capex or towards welfare. So that I think is, you're taking away from, we are all happy about the fiscal discipline, but the suffering is on the Capex front for sure.
That money had to go somewhere.
Yeah.
And one of the places you were talking about incentive to employers, I thought this was very interesting because the government will give 3,000 rupees towards all new time employees. They'll pay to the employers towards their PF contribution. This is up to, for those, all additional employment within salary of 1 lakh rupees per month. And they will give this EPFO contribution for 3 years. So while we get the details from the budget allocation, and we're wondering where all that RBI bonanza went, perhaps these are some of the heads that we have to look at. The push for employment is absolutely huge. Bala, just wanted to get your take on the kind of push we have seen for employment. And for budget after budget, we've been talking about what about the jobs? What are we doing about the jobs? Do you think that we have seen, at least for once, some very clear-cut allocation and push towards employment?
It's a big move in my view, given the fact that EPFO does the two things. One, it brings in the people who get employed. When they get registered in the EPFO, they come in the formal sectors. And second, government incentivizing by of the EPFO contributions up to 3,000 rupees, even for the 4 months up to certain period, especially for the new one, is also something will create an employment. In fact, I must mention that the way the gift city started originally in Gujarat, one of the big incentives that they gave, about 12.5% of the employer contribution, was given by the Gujarat state government. And that's one of the reasons most of the companies started setting up their own entities in gift city, like KPI, like knowledge processing centers and so on and so forth. So definitely I think it will bring in the unorganized, the employment that happens in the unorganized segment will come to the organized segment that will create an employment. Second big takeaway which I saw almost about giving 1 crore students intern. Often I see people struggle to get intern in major companies. In fact, one of the top 500 companies have to employ close to about 1 crore people by way of providing intern, for which they can use some bit of funding from CSR, which in my view is a great move. And given the fact that a lot of people who actually is now getting out of the college or now in the college, they can get access to the corporate way of functioning for them to become employable for the future. This is my view another big move that has been initiated. In fact, this in my view is a great thought which will not only serve the students who are looking for, who have an aspiration to get fulfilled by getting an employment. This is also something I see as a big, innovative, out-of-the-box thinking that they've introduced.
Ravi, you might want to come in on this one, and we talked about it before we went into the budget, where PSUs had become the biggest trade on the street. Of course, after the budget, these stocks are down 10% each. For the next 6 to 8 months, what's the trade? Is it defensive or is it PSUs?
I don't think defense. PSUs, first of all, I don't classify PSU as a sector. It's just government-owned companies which are either in banks or in defense or whichever other business.
Or fertilizers.
So from that perspective, I think the focus shifts back to companies that haven't done well so far, and from market was looking for a reason to correct, and I think budget has provided a reason to correct, and also market was looking for a reason to rotate out of certain sectors and into other sectors. So from that perspective, that particular trade, the reversion to mean trade ends, and probably we need to look at something that is more attractive from the longer 3-5 years perspective in a risk-reward manner.
Okay, and before we get in, Navneet, Munot, Manish, final comments from you as well. You called it a bond budget. What else is something that we've not discussed that you want to bring to the table? I think there's a focus on jobs, MSMEs, etc., etc.
No,
is there anything else? I mean, the Capex number was in which ways the same, but
no, nothing much.
So standard budget, par for the course, if you will.
Yeah, it's a good budget. Nothing populist. Everything is being paved for potentially better growth tomorrow.
Just one quick one, Manish. We've been all talking about an outstanding on a correction that could be around the corner because we look stretched. Do you feel like between now and a few months that correction is almost a given? Because the budget hasn't left us asking for more, to be honest, right?
Look at the reason why India is difficult to correct it in a substantial manner without global markets correcting is because there's an inertia, there's local money flowing in, and the reflex that Ravi would confirm of an investor is that has 5% correction and reallocation towards equity goes up. So you necessarily need a global headwind for you to sort of
so constructive as we stand at 24,200, this market still looks good to buy for an investor.
No. So that's very different.
No.
That's very different.
Stay
I'm saying
invested.
you're asking kal correct hoga kya?
Nahi hoega.
I'm saying inertia hai that there is a lot of money backing it. So that's the tailwind.
There is fresh money. Agar money is on the sidelines.
But if you're asking him or me or anyone else, is market cheap?
Agree.
It's not. Are you likely to make decent returns over next 3 years at these valuations? Answer is no. Will markets correct tomorrow? We don't know.
So we stay in cash.
I like
that's a summary.
I like that. That's a great summary. So last take you want to take.
Last take with Mr. Seta. Mr. Seta, just your last take. But and before we get Navneet Munot in, the buyback tax, does it have any implications for companies or sectors which are doing large buybacks?
I would feel that so far as companies are concerned, if dividend income was the choice between buyback still remains an attractive proposition. That's what I would feel, subject to reading the fine print, because the buyback tax is still a capital gains tax lesser than the normal dividend tax rate. I think overall, I would feel from an economy standpoint, from a stability, continuity, certainty standpoint, this is a very good budget. Yes, from a market standpoint, the capital gains tax changes might be a little bit of a dampener, but they've addressed the weaker sectors of the economy. Like agricultural growth was very weak. I think there's a lot on the agri sector. Job creation was very important. From production-linked incentives, we are now talking of employment-linked incentives. So I think that should help as well. So from an economy standpoint, I think the stability, continuity, addressing the weak spots and continuing the growth on the rest, I think is overall good for the economy, is the way I look. And the fiscal discipline is a big macro point.
Now I'm asking him that this rationalization on term for capital gain, she said that all financial instruments will go to 1 year. So does it mean that even debt actually goes to 1 year, or it still remains? Debt is actually part of, anyway it's an income, so it's capital gain.
So the way I think she's put it, and we look at the fine print, but listed financial assets is 1 year. I think others, she said, is 2 years.
She said unlisted financial assets, so I have that line, will be held for 2 years.
Correct. So listed financial assets, whether it is debentures, bonds, I think that's how it is 1 year for long term, and others is 2 years.
But
listed
bonds
securities,
long term doesn't apply anymore.
Correct.
So
correct,
therefore it's
correct.
only equity.
So she said that way, the listed financial assets. So I assume it will be mutual funds which are in listed equity as well as listed shares. I would presume would be 1 year, and all other financial assets and other assets is 2 years. So she's trying to simplify the capital gains tax regime.
Okay. We'll have to wait and see what the impact is. But thank you so much, Pranav Saita, Manish Dangi, Ravi Dharamshi with us. A Bala, great to have all of you for your first take. That was our think tank. We'll of course hear from Manish Sabarwal, who's part of our think tank. He's actually, we're told, in a meeting with government functionaries and was part of really also recommending a lot of things. Maybe we've seen some of them, and he has been talking about them. But Navneet Munot with us now, MD and CEO of HDFC AMC. Navneet, great to have you on Budget Day on NDTV Profit. Let's start with getting your take on what has been done with capital gains tax and how you are seeing it. The first reaction from the market is clearly negative. A bit of recovery right now. Do you see it as a big hindrance?
I think we have seen these changes many times over the last 30 years, and what the market has been expecting is some bit of stability on this front. I hope that we get stability over the next several years, and this is what is final. Our demand from mutual fund industry has been to also look at the taxation on the debt funds because it has multiple objectives, including the development of the corporate bond market, which is very critical to achieve our ambition of becoming a developed country and really boost investments. We have seen a good SIP book building, the retail resilience, providing stability to the market through the equity flows, but we need to encourage debt flows also. But I'm sure you have experts who will tell you a lot more about the nuances within the taxation change structure. But what I liked about when she said that we are going to have a very simplified structure and a comprehensive review of the Income Tax Act, and I hope that that makes life better for all the taxpayers, enhance the tax base, and it's good for everyone.
We also have with us Hiren Vaid, Director and CIO of Alchemy Capital Management, joining in. Hiren, what are your thoughts after this budget? Are you disappointed with what's happened on capital gains, or are you impressed that we've pulled off that fiscal consolidation number better than what the street was expecting? All in all, good budget, bad budget?
No, I think on the whole, the budget is good. Obviously, for market participants, the increase in capital gains tax is a sentiment dampener. Yes, I mean, over a medium to long term, these things get evened out. If you go back and look at when the 10% long-term capital gains was introduced, obviously there was an impact for a short period of time, but then everybody adjusted to it, right? Well, I mean, our sense was that there was no overarching need to raise resources and therefore tinkering with capital gains tax. But I think if I were to read between the lines, my guess is that given that capital markets were competing fiercely with bank deposits, and the worry that the regulators and the government had was that will this skew savings substantially in favor of capital markets versus other instruments. I think this is probably to kind of calm down and cool down the markets a little bit because there was a kind of a runaway rally in the markets. In my view, longer run, it really doesn't matter. But in the very short term, it is definitely a sentiment dampener.
Hiren, just want to understand to what extent it's a sentiment dampener. I mean, the tweaking on STT for futures and options, perhaps not as bad as what was expected?
I don't think that the increase in STT on futures and options is a dampener because frankly speaking, that was expected, right? I mean, and I think that, something was supposed to happen there, and I think it has happened. I think the dampener is really in terms of tinkering of the long-term capital gains tax to 12.5% and 20%, which was not expected. And therefore, to some extent, this could be a dampener in the short run. But as I mentioned, in the medium to long term, it people adjust, market participants adjust and move on. And I think that's what will happen.
I think
Outside of that, and I think that what the government has done is that used the additional resources that they have to reduce the fiscal deficit, which on the whole should be positive for the economy because it reduces your cost of capital. And secondly, I think that they have given some support, to human capital, right, across the board. And also by reducing custom duties on a few products, and we'll have to see the fine print, the idea is to promote value addition and reduce the costs for local manufacturing. So I think broadly, having kept the Capex number at what it is, they continue to do the heavy lifting. They've used the additional resources to help, give a little bit of a fillip to consumption, which is not bad. So you have a little more balanced growth. And I think, broadly speaking, also removing angel tax is a great step because you need new entrepreneurs and they need risk capital. So I think, broadly speaking, the thrust of the budget is fairly good. I don't think the budget is bad. I think it's just that, all capital markets players don't want taxes to go up. Let's be realistic, right?
Yeah.
So if that goes up,
no one likes to be taxed. No one likes to be taxed, and capital market players have always been very clear that this is still nascent. You need to get more investors on. Don't tax. Have we reached that inflection point where the government feels comfortable in increasing taxes on capital gains, looking at the huge gains people have made as well? But hold that thought. I just want to get in Rajiv Anand, Deputy MD of Axis Bank, for his first take on the budget. Rajiv, welcome. Great to have you on NDTV Profit. And, just to understand from your perspective, the support given to MSMEs, the support given for educational loans, how do you see all of these measures in a broader view?
Firstly, I think notwithstanding the whole issue of increase in capital gains, which obviously the markets are a bit disappointed. But the way that I think about it is there's been all your viewers have made a truckload of money over the last few years. You're taking a little bit of that gains to support two things: the angel tax to create more entrepreneurship. And money in the middle class pockets, and I don't think we should be too bothered with that. Maybe in the short term, yes, but I think in the long term, I think that allocation of resources I'm quite comfortable with. There is focus on job creation, particularly through the MSME sector, and I think if you look at bank balance sheets, the size of the books of lending to MSMEs has only increased quite strongly over the last 3 to 5 years. And my own belief is that the MSME sector will be over the next decade what retail was over the last decade, for banks, in terms of the ability to lend to these entities because of the entrepreneurship that they bring, because of the infrastructure that is getting built, more transparency through GST, digital, etc., has made many of these entities a lot more bankable. And therefore, the fact that there is greater thrust on the MSME sector is quite heartwarming as a banker. I think educational loans, addresses the whole issue of employability. And I think, there was a headline in this morning's newspaper as well from the economic survey that many of the graduates are, in a sense, not employable. And I think that is a problem that corporate India, faces and has been a big issue over the last few years. And therefore, being able to fix the employability and therefore be able to fix employment as we go forward, to my mind, is a very positive step.
Rajiv, Mr. Anand, it's also Samina joining in. Were you pleasantly impressed with that fiscal deficit number coming in lower than 5% and the glide path where we're talking about a sub 4.5% next year? Do you feel like all this put together makes this budget a bond budget, and also could, in the near term now, in the foreseeable future, help India's ratings improve, which will benefit institutions like yourself for sure?
Oh, absolutely. I mean, I think the previous speaker spoke about the fact that this is going to push the cost of capital down, for corporate India. And I think that, notwithstanding, the markets grumbling today, is very positive from a long-term perspective. We've all spoken about the fact that large fiscal deficits have crowded out, private sector investments, etc. That to my mind is going to be less of an issue as we go forward. And all the good things that you spoke about, the fact that we have shown commitment to this fiscal glide path should impress foreign investors and certainly should impress rating agencies abroad as well, and that in turn will once again bring in both liquidity and lower cost of capital for this country.
Okay, so a lot of positives coming in. I don't know, on a broader view, Mr. Anand, I just want to get your sense of all the 5-6 policies to boost employment, and the focus is also on employers, incentivizing employers. There's an internship scheme which is applicable to the top 500 companies. So obviously your company as well. Government will pay 5,000 rupees. The intern will be paid 5,000 rupees a month, one time 6,000 rupees. From what I heard, the private sector has to give 10% of it. How do you look at some of these schemes? Do you think they're implementable first off?
So first and foremost, I think the budget is growth oriented. As a bank, the fact that the economy is being prepped to grow at an even faster pace, I think is good for business, both on the deposit side as well as on the asset side. So I think that's the sort of the overarching philosophy that I first want to put out. There's a lot of detail in the budget one will have to go through. But as we have seen in many of the budget proposals over the last many years, implementation is always a challenge, and how the government engages with the corporate sector to be able to implement many of these schemes is something that we will have to certainly wait and watch.
Well, I think the big story, though, I think is what ENY has just picked up for us. Mr. Mayur Shah is joining us in the studios, but we'll come back to that in a minute. Navneet, what is your portfolio view now? The budget is behind us. It seems like it's largely in line with what we were expecting, even though the push on Capex, agri-consumption is not as much as we'd have liked or the street would have liked. There's tinkering on capital gains as well. If you're a market participant sitting with cash on the sidelines, what should one do?
No, I think the broader direction of sustainable growth, inclusive growth, focus on innovation while keeping the fiscal prudence has continued. And all of this is good in the long run. Think about it. Over the last 5 years, the Capex has almost tripled. The central government Capex has almost tripled from 3.35 lakh crores to 11 lakh crores. And now incrementally, it looks like government want to spend more money on the rural economy, which is actually good because a large part of the population is there and we need to invest more. It looks like government want to focus a lot more on employment creation, which is very good. We need to reap the benefit of demographic dividend. So both for consumption as well as from an investment perspective in your portfolio, there would be opportunities.
Very interesting. Okay. Rajiv, Anand, one final question, and then I have a question for Hiren Ved as well. And this is Neeraj here. This, I heard you mention about the overall good budget, focus on jobs, so on and so forth. Is there a tilt towards giving this much needed impetus to consumption? All job focus gives that tilt to consumption any which ways. There are for skill developments, etc. also money being put on the table. Do you get the sense that it is a budget in that sense tilting towards consumption as opposed to an overarching focus on Capex, which continues as is?
It's a little difficult question, and I think that's the bet that the finance minister is making. But I just want to leave a thought on the table that we are seeing relatively weaker consumption in an environment where net household savings are actually relatively weak, meaning that despite the fact that households have levered themselves up quite strongly over the last 4 to 5 years, we're seeing a situation where we're seeing consumption relatively weak. and so therefore the savings that is going to come through either better jobs because they are skilled better, or because of some of the tax breaks, whether that will go to reduce leverage in households or whether it will go to consumption is something that we will have to certainly wait and watch. But I think the bet is that all this will ensure that we will see improvements in consumption.
Rajiv, we'll leave it at that. Thanks so much for taking the time out and really being with us today. Navneet, take a moment. Understand I have to let you go, so thank you for joining in as well and giving us your thoughts. Really appreciate your time today. Hiren Ved, the markets not as disappointed as you would think when a capital gains tax hike would happen, because most people are saying this is not the greatest of times to do it, so on and so forth. Is the market taking heart from the fact that this was anyways going to come? Good, it's done in the first term, but it's being accompanied by fiscal prudence, which will help maybe in ratings at some point of time in the future, and shows the bent of the government that they are not resorted to populism in a very large scale.
No, absolutely. I think the fact that they've signaled 4.9% fiscal deficit and 4.5% next year is very clear signal to the rating agencies that, we as a country are very serious about fiscal consolidation, and that we are aiming for a much more sustainable advantage in terms of ratings upgrade and the resultant reduction in cost of capital that can happen. And that itself is a growth enabler, if you ask me, right? So rather than relying every year on the budget to stimulate growth, I think if we do things which are more structural in nature, which reduce our cost of capital in a durable manner, I think that's a better outcome than trying to use the balance sheet every year to spur growth, right? And as you rightly mentioned, that they've done this without actually taking the pedal off Capex, because they've kept the Capex same. And I want to bring another perspective. While there was an expectation that the Capex number would increase slightly because the government has a little bit of resources, we must also mention that there is a lot of money which has been set aside for Bihar and Andhra Pradesh for infrastructure, right? So there is a new power plant coming up. There is the Polavaram irrigation project. So I think that money, whether it is for tourism, whether it is for power, whether it is for roads, whether it is for other infrastructure in these two states, also means that it is Capex, right? So to that extent, I think that they've been able to bring up these slightly more struggling sectors and areas that needed focus, like job creation, skilling, without taking the pedal off Capex. Right. And hoping that now the private sector will start to kick in, which actually has already happened, because if you heard the CEA say that private Capex has already gone up 20%.
Yeah, it has. The top firms have, maybe the bottom ones haven't. But Hiren, you spoke about the renaissance of private Capex way earlier. It's showing signs. Thank you so much for joining us on the budget day and giving us your thoughts as well. Really appreciate your time. Okay, my colleague Charu Singh is speaking to Ashish Chauhan, the CEO of NSE. Let's dip in to hear that.
Incentives. Even smaller companies have been given incentives by saying they will get the first salary of the new employee over 3 tranches, and also some portion of the provident fund has to be paid, have to be paid by the government. So many incentives have been given to create jobs, create skills, and also include the women in the workforce. And those are the way we would be able to take advantage of our demographic dividend going forward.
So, sir, in all, you feel positively towards the budget?
I would give 10 out of 10 to the finance minister for just sticking to the basics of what is required. And that is, I think my friend Nilesh had told me in the morning that it has to be like a Surya Kumar Yadav catch in the World Cup final. And the employment creation is that catch, right? And so for me, this is focusing on the right thing for the future of India.
Thank you so much for speaking to us, sir.
Okay, well, that's the view from NSE as well. But Samina, big changes afoot on the taxation front.
And good changes from the sound of it, right? So I think what we have, Mayusha from Ernst & Young as well, who's in the studios with us. But indexation benefit, we believe, on real estate, gold and other non-financial assets has been abolished. And there's a change in treatment of LTCG. Mayush, you picked this up a few minutes ago while we were all disappointed what was happening on LTCG from 10 to 12.5. But I believe on real estate, it's actually reduced. So this could be good news for real estate companies and gold companies.
That's right. So, you are right. In terms of tax rate, it has gone down from 20 to 12.5% for long-term capital gain arising on account of property sale or any other assets. However, at the same time, what they have done is they have withdrawn the indexation benefit which was available for any property which was transferred from today onwards. So till today, if any property has been transferred, it will definitely get indexation benefit, but thereafter it will not get any indexation benefit.
Can you simplify this for us?
Sure. So let us say that if a property is sold, say on 1st of July, you will get indexation benefit on sale of such property. But if you are selling anything after today, then that property will not have any indexation benefit available to them.
But property is an asset class which can't be sold just like that. So suffice to say that indexation benefits on real estate are gone.
It's gone. Absolutely right.
Now this could be a big negative impact, right?
It would have negative impact coupled with that tax rate has gone down from 20 to 12.5. So to that extent, I believe, it will set off the impact, but it is simplifying that now indexation and all that, we don't have to recalculate, calculate and things like that. It becomes very simple.
And I think the markets are seeming to like it because all your real estate stocks are reacting negatively to their news flow. In fact, from the likes of an Oberoi Realty to every other one on the street that we are seeing, Phoenix Mills, are all trading deeply in positive territory. They may be off their day's high point, but still looking good. What about gold? You want to take us through, because it's at non-financial assets. I'm guessing there's real estate and then there is gold as well.
That's right.
So you want to walk us through what has changed for gold taxation and what could it mean for the companies? So companies like a Titan, a Senco, is there a direct correlation?
Yeah. So what happens is that when any gold is bought as a capital asset, earlier, we used to take indexation benefit and we used to pay tax at the rate of 20%. Now what is happening that same like immovable property, if we are selling off any gold or any other item as a capital asset, in that case now no indexation benefit is available. At the same time, the tax rate has gone down from 20 to 12.5. So to an extent,
does your math suggest that this 7.5% downtick in capital gains rate kind of equates with the indexation benefit that came in for very old properties or gold bought way earlier, 20 years ago? I'm guessing the indexation benefits would still be higher than the 7.5% reduction?
Let's look at it because we had to replace the fair market value as on 1st April 2001.
Right.
And indexation has started from that point onwards. So if we look at now 300% is what the kind of upside we could have availed.
Right.
Because of the inflation indexation number.
Exactly.
Now, when tax rate has gone down, it has not gone down to that effect.
Exactly.
Right. It's not gone down by 300%. So you will have some.
So net for something that was bought way earlier, it's still a negative. But for a lot of stuff which has been bought in the recent past, the reduction in tax rate nullifies the indexation benefits going away.
And this is being in line with the global practices.
Got it.
Because a non-resident investing in India, if they have to go through, though non-residents are not entitled to indexation benefit. But like Indian people who are investing abroad, they are taking indexation benefit as well as currency exchange benefit. Now they will be able to have only one benefit and it will be unifying because then you can claim all the credits which has been paid in foreign country over here and vice versa. So it will kind of simplify from an international standpoint and it will be aligned with the global tax policies.
So this is also for financial assets outside the country. So
That's
if you're
right.
going out and buying funds or stock, say in the US, the same applies to these.
That's right.
And that's also a big piece, by the way, with the LRS being utilized by most people who live in this country. This could be one more factor to watch out for. Mayur, anything else that stood out? I think we've highlighted most of it, but you want to share with us your thoughts on what have you made of the changes as a whole on the personal taxation front?
See, the way I look at it, budget is, they are simplifying a lot of things, which was kind of creating a lot of complexity. Especially when you are going to digitalize everything, the challenge is that when you fill up the form, it is so lengthy and cumbersome. So this will kind of simplify so much that, nobody would need any consultant like me.
So you might be out of a job. You're not worried about that?
No, not at all.
Just one thing. One last question actually. And this holding periods being now just 2 holding periods, like 12 months and 24 months.
That's right.
Itself, is that a big
It's a big change.
It's a big change.
Big change. Because earlier, what asset will be qualifying as a long term, depending upon the type of assets, we used to decide what should be the long term and what should be the short term. Now it is very simple. 12 months and 24 months.
Got it.
Anything which is being held for 12 months is long term and rest is...
Got it. Okay. Mayur Shah, thank you so much for bringing us this piece of update as well. So for real estate, gold or non-financial asset investors, it's a big change on the taxation front as well. Must say the markets have behaved fairly okay. 0.7, 0.8% lower. Look at that volatility though. And this was anticipated. Kush Bora is with us. Kush, what stands out in terms of the charts currently on specific pockets? Because FMCG, Titan, etc. are all really running amok.
Hi, Neeraj. First up, let me just give you a quick update on something that we discussed in the morning, which is Bank Nifty. We were talking about a constant writing, in the call options, a constant pressure on the call options, and the 52,000 put option, that we discussed with a target of 700. Well, the high for that was 69.95. So I think that pressure is going to continue. If the Bank Nifty does indeed close below 51,800, then I think we could slide to 50,000 or maybe just a little under as well. So that's a bit of a caution on the Bank Nifty. Now, you're right, as far as the sectors go, the consumption sector is a standout right now. Titan's seen a massive short covering. So I think this could continue, but perhaps 3,500 is the level where it will halt because there's a 200-day moving average pressure as well, the call writing also. This is for Titan.
Okay, Kush, just before you move ahead, so viewers just want to mark, one is Titan, and look at that, 7.5% uptick in the session today. So big move for Titan, that is one. And then you look at FMCG names as well. I think those two have had a good move. ITC and some of the others have had a serious up move there. Kush, any thoughts here?
I think that a couple of stocks stand out for me. Godrej Consumer Products, Tata Consumer Products. I think some of these continue to do well. They were doing well before the budget as well. And this fillip is just going to boost the rally that we are seeing. So Godrej Consumer Product is perhaps something that I would buy, perhaps hold at current levels also.
Just a few Andhra stocks that are actually doing quite well. So pull up KCP, NCL, Deccan. All those stocks are actually looking good though. Anything to do with Andhra cement companies also having a pretty pleasant day. There you go, Aditya Vision, if you can pull that one up too. Let's see what Aditya Vision is getting up to. But KCPL is up 3%. Aditya Vision, which was trading negative at the start of the budget, had moved in. There you go, 4% on KCP is what we have. So some of these counters are looking well placed in trade. Kush, another space that's actually looking good is real estate.
Sorry, Kush, apologies. We'll come to you in a moment from now. But Ramdev Agarwal, chairman and co-founder of Motilal Oswal, is with us. So we need to go across to that conversation. Mr. Agarwal, great having you. Thanks so much for taking the time out. What is your initial assessment of the budget? The market seems to have taken a budget with capital gains tax being hiked rather well.
Yes. So, Neeraj, I would say that it was in any case expected to be a capital market heavy budget, and FM has delivered to that promise. So long term has been increased, short term has been increased, STT has been marginally increased. So clearly there is a I was a bit disappointed with the increase in the long term taxation. Not that it hurts me a lot, just that the asset class should be encouraged. When the SIP flow is coming, the whole nation is becoming very inclusive, and it's a fundamentally a long-term kind of a story. And there, I think they should not have changed the long-term capital gains tax from 10 to 12. Short-term, speculative, whatever you do. So otherwise, I think it's a consumption-oriented budget. They've given something to everybody. So I think that consumption boost will come to some extent. And the guys who make money in the market, see, market-facing economics has not changed fundamentally. They have not changed the market-facing economics. Only thing is, after you made money, you pay a little more taxes, which is kind of not an unfair kind of expectation.
Mr. Agarwal, very good afternoon, and great to have your take. In terms of just what the impact is of capital gains, do you think that this initial hit will sort of recede? The market will be able to digest it after a point? And are you disappointed that they've tinkered with long-term capital gains tax, or was that coming sooner or later?
Yeah, so that's what I was saying, that they have not changed materially the market-facing economics. When I come to the market, first I need to make money, then only I pay taxes. So my market-facing economics remains same. Basically, yes, there is some amount of change in the STT for I think high-frequency traders will pay a lot more than what they are paying. So I think they have hit the heart of excessive trading. I think that's where the trader may pay a small amount, but actually government will get a lot of money out of that change in STT. That's my sense. Second, I think the capital gains tax, I think every level has been increased, long as well as short. So I think it's a long-term change, and people have to get reconciled to paying a little higher tax only if they make money in the market. The issue is whether you make money in the market or not, and that is not dependent on your taxation charges. It is dependent on what happens to the corporate earnings, and I think corporate earnings will definitely get a boost out of the consumption which will be there across the board thanks to what concessions they have given.
Are you seeing enough, Mr. Agarwal, to really boost the consumption story in a longer view? I mean, today we might be seeing a very momentary response in that space and in those stocks because of what they've done on employment or the new tax regime, etc. Do you think enough has been done to really move the needle? Because we've been talking about consumption at the bottom of the pyramid needing that boost.
See, this consumption or GDP growth consumption pickup, I mean, it's a multifaceted kind of thing. I mean, it's not the one thing, one taxation benefit here or there that's going to impact. I think a good monsoon across, RBI governor is already saying that the rural demand is picking up recently. So I think the good monsoon and now widespread benefit to the masses, whether it is standard deduction or lower tax rate or stipend and the job subsidy. So all those things will over a period of time should give boost to the consumption, and that will see the FMCG companies or consumer companies which are not doing well. I think that's where I think you'll get some earnings pickup over a period of time. So my sense is, on the whole, it will be accretive to the corporate earnings. But some kind of a little more taxation for the people who are making money in the stock market.
Mr. Agarwal, hi, it's also Samina joining in. So it's back to business then. Budget is behind us. Where from here? What should investors be doing? Does the budget give us an excuse to correct from here, take profits off the table? Or will the fact that it's a neat, clean, fiscally well-consolidated budget give the market the impetus for the next leg of the rally from here on?
Yeah. I don't think there is any impact to the market outlook. I mean, whatever was the outlook before the budget, I think it remains fully intact. Because right now market outlook is dependent on whatever the corporate earnings expected for next 1 year. I would think the corporate earnings will get little bit, almost 0.5% to 1% boost out of this budget. Second, I think the flow, which is going to determine the overall demand for the securities, that remains intact. So I would think that if market has to go at the rate of 15% for next 5 years, that doesn't get impacted at all. So the true investors who are coming through SIP revolution, which is on, I think they must continue and they must make sure that in the next month or so, if there is a correction in the market, then also they continue with their SIP. So I would think it's a perfectly healthy environment for long-term investing.
Mr. Agarwal, there was a lot of talk of how the money or the extra bonanza from the Reserve Bank would be used, it seems that, and because there's only 8 months left, there isn't as much capex that could be done. So it seems that the government has opted for higher fiscal consolidation. Is this a nudge to global rating agencies as well, that we are doing something which the other global nations aren't quite doing?
I would think so, but we have to listen to the interviews of the Finance Secretary and FM of the post-budget presentations, and what strategy went behind in terms of fiscal consolidation, and because a lot is happening beyond the budget. There is a bond inclusion, JP Morgan bond inclusion, so you are seeing the flow. Last week itself, our forex balance went up by $8-9 billion. So now I think they must have been waiting for the budget, and the post-budget, again I think you'll see the FDI and FI flow picking up. So my sense is that we are in a very sweet spot as far as the foreign flow is concerned, and budget is just about one of the small event on the way, and then basically maintain the environment, the positive good feel factor in the economy that has been fully maintained, and they have given a little more boost. So my sense is that tomorrow people will forget what has come in the individual taxation. And I think there is one more big thing about abolition of the buyback tax. Now and then the taxation will be in the hands of the recipient. I think that is a huge bonanza for the actually promoters. Promoters earlier were paying 20% tax at the corporate level, and if it has to be paid in the hands of promoters, then they'll pay only 12.5%. So my sense is, let's see what is there in the fine print, but it looks like a very big change.
Thank you so much, Ramdev Agarwal there with his take on the budget and what we can expect. But let's also welcome to the conversation Prashant Khemka, founder White Oak Capital with us, Nilesh Shah, MD of Kotak Mahindra AMC also with us, and Sunil Sanghania, founder of Abacus AMC. So we've got a power-packed panel with all the voices in at this point. Let's start with the quick first takes. Nilesh Shah, I'm not going to do the standard rating of the budget, but this one at least had a surprise in terms of capital gains tax. Everyone was in the will she, won't she, will they, won't they kind of a situation. Are you surprised negatively?
No, I'm not negatively surprised. I'm just disappointed. STT was levied in place of capital gains. Now STT and capital both continue since 2018. Now capital gains tax is revised upwards. But there is a non-level playing field between foreigners and locals. If FPI invest in Indian derivatives, they make capital gain. If you and I invest in Indian derivatives or trade in Indian derivatives, it is business income. The foreigners doing trading in our derivatives are earning tax-free income, whereas we pay tax as per applicable slab rates. I think we should create a level playing field between foreign and local participants in the market so that there is equal distribution of taxation.
Got it. Okay. And okay. So, okay, that's the first take. Let me get the first take from Prashant Khemka as well. Then I have a follow-up for Mr. Nilesh Shah. Prashant, what does this mean for equity markets by and large? There is also this angel tax, which is a very interesting thing which has come in. But what's your first take on the budget from a market's perspective, both from a taxation as well as this adherence to the fiscal deficit, are actually beating what they had laid out?
Certainly, thank you, Neeraj. So first of all, in almost all respects, other than capital gains tax, the budget to me seems like a continuation of prior budgets. The prior budgets were all received well by the investment community, and we have to keep in perspective that the impact of budgets in normal course of events is with some rare exceptions, is fairly short-lived on the markets unless there's some very tectonic shifts in the way the economy is expected to grow going forward. So in some sense, there's a continuity budget. This one negative on capital gains tax, I think, as Nilesh Bhai also mentioned, the revenues could have been generated in other ways as well. It just, besides, first of all, it's a 2.5% increase. Let's forget for a minute the short-term gains tax, which you can't really forget, but the long-term gains tax has been increased by 2.5%. That means if you are going to expect 10 to 11% over time, I think reasonable to expect 10% return from the market, then it has shaved it off by 25 basis points. It's material, yeah, because there's no indexation benefit. So your real return has gone down more than 2.5. It's gone down probably by 5%. It also opens up a Pandora's box in a sense. We had a certain stable tax regime on investors for last several years. Yeah, 10% on capital long term, 15% short term. Now, the increase in this budget also raises the risk in investors' mind, legitimately so, that we can have frequent changes. And when I say changes, usually with things related to taxes, they only go in one direction. So could this imply future tax hikes as well? Already, I think, in my experience of having invested in developed and EM markets, the taxes on investments in equity markets in India are towards the high end, especially the variety of taxes, all taken together. I'm not saying just look in isolation, long-term gains tax or short-term gains tax, and so on, including the dividend tax and the buyback tax and the STT and all those. So at a certain point, there'll be a straw on the camel's back. A theory would be applicable. I don't think this 2.5% increase is that straw, but increases the risk that down the line you'll have further uplift in this tax rates. But that is the primary concern with the budget. Otherwise, I think most of the budget, particularly, hopefully, the fine print would have to be looked at. Nilesh Bhai was just mentioning a short while ago on the media, which is what I'm frantically searching for in the fine print, that certain laws have been amended in the direction of ease of doing business, which would allow fund managers like myself sitting outside India to come back to India and live a normal life in India. I'm yet to see that print. My team is looking for it as well. But if such things are indeed included in the fine print, then ease of doing business is what I usually always look for from a budget rather than this tax tinkering. The budget is an opportunity. Every budget to me is an opportunity to improve ease of doing business, because all said and done, we are last published, ranked 63rd on ease of doing business. We want to be number one to become a developed nation by 40. We can't become a developed nation by being 63rd nation on ease of doing business.
That's true.
Yeah?
That's
so that
true.
Fine print, I'm very much eager to look into as it becomes available.
Yeah. Prashant, I can almost feel the pain. But I think that's the kind of voice that Nilesh Bhai gave as well, and you rightly referred to it. So Nilesh Bhai, I think Prashant makes this important point, that does this open up in a sense, a bit of a runway, that people will not have clarity now about whether this is the last of the tax changes and the max tax that we have, which is 20% on short term, or could it be more?
So at least this year, Neeraj Bhai, the details are out. And I'm sincerely hoping that the safe harbor clause which Prashant Bhai referred to, and which I had the pleasure of handing over to the Honorable Finance Minister in my pre-budget consultation, really works out. And next time, both me and Prashant Bhai are in your studio in person, and not I am in local office and Prashant Bhai in global office. And that's the important point. If India has to develop as a regional financial center, we have to bring Prashant Bhai in India, not keep him outside, by changing our rules and facilitating it. And this budget is a step in the right direction. There are changes being proposed to improve ease of doing business, ease of doing investments, and we should keep on taking feedback so that we ultimately achieve our objective of bringing talent into India.
Nilesh Bhai, so a couple of things. I want to ask you about employment, etc., but I just want to play devil's advocate on the capital gains tax changes. Of course, the impact for real estate and gold still has to be understood because indexation goes out of it. But on equities, if the counter argument would have been that look at the kind of gains made in equities by everyone, why should the government not take a little bit more from you? Every other kind of income is also being taxed. What would you say to that?
So one, why do we give tax incentive? We give, like vitamins, tax incentives for correct certain deficiency. Where is the challenge today? Is government doing its job of building infrastructure? Answer is yes. Is private investment coming through as much as they wanted? Even yesterday's economic survey mentioned that now the ball is in private sector's court to take it forward. How will private sector invest if there is no capital formation? The corporate India makes 16 lakh crore of profit, and they give probably 40% of that by way of dividend. Now, is there an investment happening? Answer is it's happening on a limited manner, which is why tax incentives are needed so that capital market can provide capital to our entrepreneurs and they can go and then invest. Today, 9 lakh crore rupees in last 3 years between FY21 to 23 has gone into currency notes. Does people make money on currency note? Answer is no. We need to give them incentives so that currency note, instead of lying in Tijori, comes back into the economy. We have imported on an average 700 tons of gold. In 22 years of this century, our net import of gold, including gold smuggling and people wearing jewelry and passing through green channel, is about $500 billion. More than our foreign direct investment, more than our foreign portfolio investment. Where is that gold lying? It's lying in Tijori. Shouldn't we give tax incentives so that that gold comes out of Tijori and stays in formal economy? Tax incentives are needed to correct the deficiency on low capital formation.
Okay, just that's a good point there. So perhaps we could have been a little softer with long-term capital gains tax there. That's the resounding voice coming through. I just want to get, Prashant Khemka, your view on the employment push. And that really, I would say, if I had to predict what tomorrow's headlines will be in all the newspapers, among other things, after capital gains tax, would be the big push for employment. I want to understand from your point of view, do you think that there are some out-of-the-box ideas which could really change things?
Certainly, but before I go to that, I do want to, thank Nilesh Bhai for really batting for the industry on this, regardless of what is there in the fine print, batting for the industry for this change, which would really spawn and it's tied to the employment creation as well. It would spawn a birth of a global hub in India. Just like for IT services, India is a global hub. With a small change in the policy, the right change in the policy that Nilesh Bhai was referring to, the safe harbor clause, it would lead to India becoming the global hub, just like it is in IT services, becoming a global hub for asset management as well. And think of the employment creation that would lead to. So the employment creation initiatives are very positive in the budget, but what structural measures that can, besides the incentives, other structural measures which come along with ease of doing business, not just related to the safe harbor clause, but across board. The finance ministers talked about reviewing the tax code within the next 6 months by the time of the next budget. Simplification of tax code, leads to greater ease of doing business. That itself should spawn and have a far deeper and much larger impact on job creation. Then, what is also welcome, very welcome, in the interim, the higher allocation to job creation initiatives, be it in skill development, upgradation of skills, and incentives to manufacturing sector for first-time employees, and the incentives in form of contribution to the pension plans. All those are very welcome moves, but you have to think in terms of combination of these fiscal incentives, which may work very well in the short to interim time periods. Combine that with the structural job creation possibilities that would come with greater and greater ease of doing business.
Absolutely. So overall, a good budget. No one likes to pay more taxes. So you're seeing that also play out, not just in the markets, but from some of the conversations we're having. Having said that, markets have recovered from its worst levels of the day. An interesting conversation going on right now. My colleague Samina is speaking to Sunil Singhania, founder of Abacus. Let's listen in.
CG, your consumption, and it's worked out beautifully well, and we can see that in terms of your Abacus portfolio returns as well. But going ahead, what about other consumption or rural-facing sectors? So two-wheelers, tractors, those look expensive, or those could make good bets for now?
So our view on two-wheelers has also not been great, but two-wheelers have been the star performer last 1 year. I think it's been a case of P multiples going from like mid-teens to mid-20s. Which is surprising because volume growth for two-wheelers has also been low single digits, and there's also a threat of EV which is around the corner. So frankly, we don't have a very strong view on two-wheelers, though we have sort of made good the underweight on two-wheelers by having some ancillaries which are focused on two-wheelers. Tractors continue to be a little bit of a cyclical play. You always have 2 good years and then 1 bad year as far as tractor is concerned. Last 1 year has been that soft year. But now with monsoons trending up well, hopefully, towards the later half of the current calendar year, you'll start to see uptick as far as tractor sales is concerned.
Sunil, what was the cash position that you went into this budget with? And now that the budget is behind us, but we're still in the thick of the earnings season, what sort of an allocation or growth path are you planning out for the excess money that's on the sidelines in your portfolios?
No, so we never have had a large cash position. Neither we have had any view that we need to create 8%, 10% cash. Our view is that invest rightly rather than being fully invested. And I think that has been our stance. Before the budget, we did not feel that the market would correct sharply, nor do we have a view that the market is going to move up sharply. I think we have already seen last 3-4 years, markets giving extraordinary returns. I think our base case scenario going forward for the next 3-4 years is low to mid-teen returns. And that continues pre as well as post-budget.
Okay, low to mid-teen returns possibly is what Sunil Singhania is saying. Let's get one more voice into the mix. Dharmesh Mehta, MD and CEO of DAM Capital, joins in on the conversation. Dharmesh, great having you. Thanks for taking the time out. You speak, Dharmesh, to a lot of people who put in capital into the country as well as companies which are going public. What's your sense of the impact that a hike in capital gains, both short-term and long-term, could do to the sentiment at the very least?
See, honestly, it's a very disappointing move because the stock markets were giving great returns, it was fueling the economy in a big way. To dent that in a bit is not very, good signs. But markets live out this, in 2 days, people will forget. People come to stock markets to make money. So they won't care whether the tax has gone from 10 to 12.5 or 15 to 20%. If they see market giving returns, they'll forget about this move, which was, should have not been done, but now that it's done, people will forget it. So I wouldn't see a big sentiment negative for the market, but this could have been avoided.
Does this impact the primary market pipeline, Dharmesh? Because a lot of conversation around how maybe 80,000-90,000 crores worth of primary paper slated to hit the markets in the next 9 months. Do you think that gets impacted at all?
No, I don't think so. That will be impacted because, as I said, people come to make outsized returns. So 2.5% of higher long-term capital gains or short-term will not dent that sentiment for sure. India is in a sweet spot. They're doing very well. If you look at this budget also, it has been a decent budget in that sense. If you remove the stock market impact, there's nothing negative in the budget for which the view on India will change. So this negative event will be forgotten in 2 days and we'll be back to business of making money and identifying companies where they can make more than 20, 30, 40% returns rather than worrying about this short-term tax impact.
Dharmesh, hi, good afternoon. Tamanna here. Apart from the tax piece of it, and you addressed that quite clearly, I'm just wondering that after this budget and from what we're seeing in the markets today, are you seeing a longer sort of rejig in what the favorites are? We're seeing your rail stocks really suffer. Your PSUs suffer, all of those infra plays. Today is all about consumption. Do you see that trend continuing for a bit, looking at the thrust of the budget?
Well, I don't think that will be a big impact because in another 6 to 7, 8 months, you're going to see another budget coming. So unfortunately, we have 3 budgets in last 1 year. So I wouldn't say markets will react too much on this budget. I think so. It's the same story again back tomorrow. People will look at goods sectors which they are following, and I don't think that there's anything in the budget which will make me negative on certain sectors.
You're not negative on any sector right now, but what are you most positive on? Let me just place the question that way.
Well, this budget has thrusted on the rural economy. So I believe any rural theme or rural stocks that should do well. So that's a big positive out of the budget is on the rural economy.
Okay, Dharmesh, no sectoral moves per se, but are you happy with the fact that the number on Capex has been kept as is, and the money that was there excess from the RBI dividend has been used to prune down the fiscal deficit even further? Is it a signal to global agencies of sorts about what India is doing and sticking to the fiscal glide path with even more alacrity?
Well, fiscal discipline is always good for the country and for the markets as a whole. But yeah, I would have been more happy if there was more thrust on Capex, especially on infrastructure, which is the need of the hour. But as I said, another budget is on the way in 6 to 8 months. So maybe they kept it for the next one.
All right. So thank you for that. Dharmesh Mehta, MD and CEO, DAM Capital. Short, sweet and crisp answers there on what he expects from the budget. Kush is with us. So Kush, we've heard all the gyan, all of the inputs coming in. Everyone likes the budget like they always do in every budget, except this time people are being quite honest that they're not very excited about the capital gains tax. Markets, of course, took a huge knock. Look at that Nifty chart and then has begun recovering. They'll get over it. Market will get over having to pay a little more tax. But what do they do right now? You are entering the fag end of this budget session, about 1.5 hours to go. What's the play?
I think, again, I'll allude to what we discussed in the morning, which is 24 hours from now, markets will perhaps continue doing what it was doing before the budget was announced. In fact, the markets are doing that a little earlier. What do I mean by that? Real estate had seen quite a bit of a bump up, but most of these stocks are in the red, perhaps one of the highest losing sector for the day. And guess which sector is doing the best? Lo and behold, IT has made a strong comeback. So we're exactly doing what the market was doing before the budget, and I think this theme will continue. From a standpoint on the indices, I think 24,200, if that is held on the Nifty, you should continue to hold your long positions, but once that is taken out, exit. 51,800 seems to be the level that the Bank Nifty might close below. So if that is lost, then Bank Nifty goes into a short territory. And from a near-term perspective, as I said, something if you have to take out from the budget. Anthony Waste, this stock was doing well before the budget. Even today, it's holding on to its gains. So I think from near-term perspective for a target of 725, this is one stock that you can consider. Keep your stop losses close to 660 levels.
What about a team lease right now? A team lease, a Quest, all of your employment sort of pushes, and you're seeing that play out definitely fundamentally, a team lease as well. What are you seeing on the charts, Kush?
Again, my concern comes from the fact that they're not able to hold the highs that they have made. If you remember, when the budget speech was on, and we were having this conversation that a lot of stocks that are moving aren't really able to hold the highs that they had made. The same thing applies for team lease. So while this is a shot in the arm, the stocks perhaps now already witnessing some profit booking. Quest Corp 2, I think 650 is a resistance level. So I wouldn't buy into them now. I think that move is done. We'll perhaps see if this momentum continues tomorrow, but for now you could just take this as an exit opportunity if you're holding from lower levels.
No, I didn't. Sorry, I'm just saying I didn't see any announcements specifically. I don't know if I've missed it on power, because it's a big expectation with all the 500 gigs of capacity to be added that there will be some mention about how they'll move from fossil to non-fossil, but no specific announcements on power, at least to the best of my mind. Wonder if that is a bit of a deterrent, because some of these stocks, Tamanna mentioned the railway stocks. Look at some of the energy. I mean, Suzlon is a separate kettle of fish, but otherwise, a lot of these stocks have come off. 10%. Yeah, Borosil Renewable is up about 9.5%.
I'm sure what's happening now. AstraZeneca, have you guys looked at it? 10% on AstraZeneca. Is it a cancer drug importer? I don't know what it is on Astra.
Could be, because they have waived off on 3
duties. So BCD on 3 cancer drugs has been waived off. Now, Whether that has to do with, whether AstraZeneca has anything to do with it is something we'll have to wait and understand. The stock is up and about 10% higher. Borosil is also holding up quite well, 10% on Borosil. Angel One is up 6.5%. Not sure what the story there is. Easy Trip Planners, so anything to do with domestic tourism companies are doing well on back of that push coming in to create those tourism corridors in the country. But Kush, very quickly, while I know that a bunch of these FMCG, IT stocks are doing well today, but would it be prudent to take money off the table before the day ends today? Because I'm assuming if you're back to business tomorrow and if this LTCG settles in to the minds of traders and investors, then I think this FMCG play may not work.
So, Samina, just to the point, markets I think have now matured enough to understand that this is perhaps a knee-jerk reaction, as some of the fundamental guests were also saying that, what do you still do? I mean, the taxes have gone up, but are you going to not park your money here? I mean, I don't think that's the case, right? So I think the markets will continue doing what they were doing. And in that sense, FMCG was doing well. IT was doing well. So I would continue these two stocks. What I would take money off from is those stocks, which got a shot in the arm but haven't really been able to hold, the higher levels. So for me, the likes of HCL, Persistent, these are, a hold. Tata Consumer, Godrej Consumer Products, these are a hold. So I would continue holding on to these, stocks and sectors which were anyway doing well.
A quick mention, and Sunil actually mentioned this. He said by your LTCG being revised from 10 to 12.5%, it converts to 35 basis points. So if you were first gunning for returns of 15%, today you have to add, if you have to pay that additional taxation, the returns that you need to gun for is 15.35%. So it doesn't mean that just because LTCG has gone up, you're going to stop investing in this market. All you will do is probably hope and try to make 35 basis points more in terms of returns. So I think that was an interesting takeaway and probably a good way to look at it. A lot of these shrimp companies are doing well. So Avanti Feeds, Apex Frozen, both of those counters had it quite good in the early minutes of trade. We'll take a break on that note. We'll come back. The markets are well off the day's low point. We're still down about 0.5%, but we've recovered 50% of the losses that we saw about an hour ago. We'll take a break. We'll come back and start winding down trade, get you the Prime Minister as well, of course, as he addresses the press very shortly after this break. So stay tuned.
ले जाने वाले इस महत्वपूर्ण बजट के लिए मैं सभी देशवासियों को बधाई देता हूं। वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम बहुत बहुत बधाई की पात्र है। साथियों, ये बजट समाज के हर वर्ग को शक्ति देने वाला बजट है। ये देश के गांव गरीब किसान को समृद्धि की राह पर ले जाने वाला बजट है। पिछले 10 वर्षों में 25 करोड़ लोग गरीबी से बाहर निकले हैं। ये जो न्यू मिडिल क्लास बना है, यह बजट उनके सशक्तिकरण की निरंतरता का बजट है। ये नौजवानों को अनगिनत नए अवसर देने वाला बजट है। इस बजट से शिक्षा और स्किल को नई स्केल मिलेगी। ये मिडिल क्लास को नई ताकत देने वाला बजट है। ये जनजातीय समाज, दलित, पिछड़ों को सशक्त करने की मजबूत योजनाओं के साथ आया है। इस बजट से महिलाओं की आर्थिक भागीदारी सुनिश्चित करने में मदद मिलेगी। इस बजट से छोटे व्यापारियों, एमएसएमईज को यानी कि लघु उद्योगों का उसकी प्रगति का नया रास्ता मिलेगा। बजट में मैन्युफैक्चरिंग पर भी बल है, इंफ्रास्ट्रक्चर पर भी बल है। इससे आर्थिक विकास को नई गति मिलेगी और गति को भी निरंतरता मिलेगी। साथियों, रोजगार और स्वरोजगार के अभूतपूर्व अवसर बढ़, ये हमारी सरकार की पहचान रही है। आज का बजट इसे और सुदृढ़ करता है। देश और दुनिया ने पीएलआई स्कीम की सफलता देखी है। अब इस बजट में सरकार ने एम्प्लॉयमेंट लिंक्ड इंसेंटिव स्कीम की घोषणा की है। इससे देश में करोड़ों करोड़ों नए रोजगार बनेंगे। इस योजना के तहत जीवन में पहली नौकरी पाने वाले युवा की पहली तनख्वाह हमारी सरकार देगी। स्किल डेवलपमेंट और उच्च शिक्षा के लिए मदद हो या फिर 1 करोड़ नौजवानों को इंटर्नशिप की योजना, इससे गांव के गरीब के मेरे नौजवान साथी, मेरे बेटे बेटी देश की टॉप कंपनियों में काम करेंगे। उनके सामने संभावनाओं के नए द्वार खुलेंगे। हमें हर शहर, हर गांव, हर घर एंटरप्रेन्योर्स बनाना है। इसी उद्देश्य से बिना गारंटी के मुद्रा लोन की लिमिट को 10 लाख से बढ़ाकर 20 लाख रुपए किया गया है। इससे छोटे कारोबारियों, विशेष रूप से महिलाओं, दलित, पिछड़े, आदिवासी परिवारों में स्वरोजगार को बल मिलेगा। साथियों, हम सब लोग मिलकर भारत को ग्लोबल मैन्युफैक्चरिंग हब बनाएंगे। देश का एमएसएमई सेक्टर मध्यम वर्ग से जुड़ा हुआ है। एक प्रकार से एमएसएमई सेक्टर की ओनरशिप मध्यम वर्ग ही है और इसी सेक्टर से गरीबों को ज्यादा से ज्यादा रोजगार भी मिलता है। छोटे उद्योगों की बड़ी ताकत, उस दिशा में हमारा अहम कदम है। इस बजट में एमएसएमईज के लिए ईज ऑफ क्रेडिट बढ़ाने वाली नई योजना का ऐलान किया गया है। मैन्युफैक्चरिंग और एक्सपोर्ट इकोसिस्टम को हर जिले तक ले जाने के लिए बजट में अहम घोषणा की गई है। ई कॉमर्स, एक्सपोर्ट हब्स और फूड क्वालिटी टेस्टिंग के लिए 100 यूनिट्स, ऐसे कदमों से वन डिस्ट्रिक्ट वन प्रोडक्ट अभियान को गति मिलेगी। साथियों, ये बजट हमारे स्टार्टअप्स के लिए, इनोवेशन इकोसिस्टम के लिए ढेर सारे नए अवसर लेकर आया है। स्पेस इकोनॉमी को बढ़ावा देने के लिए 1000 करोड़ रुपए का फंड हो, एंजल टैक्स हटाने का फैसला हो, ऐसे कई सारे कदम इस बजट में उठाए गए हैं। साथियों, रिकॉर्ड हाई कैपेक्स इकोनॉमी का एक ड्राइविंग फोर्स बनेगा। 12 नए इंडस्ट्रियल नोड्स, देश में नए सैटेलाइट टाउन्स का विकास और 14 बड़े शहरों के लिए ट्रांजिट प्लान्स, इससे देश में नए इकोनॉमिक हब विकसित होंगे और बहुत बड़ी संख्या में नए रोजगार बनेंगे। साथियों, आज डिफेंस एक्सपोर्ट्स रिकॉर्ड स्तर पर है। इस बजट में डिफेंस सेक्टर को आत्मनिर्भर बनाने के लिए अनेक प्रावधान किए गए हैं। आज पूरी दुनिया में भारत के प्रति आकर्षण बढ़ा है और भारत में टूरिज्म के क्षेत्र में नई संभावनाएं बनी हैं। टूरिज्म क्षेत्र गरीब और मध्यम वर्ग के लिए कई अवसर लेके आता है। इस बजट में टूरिज्म क्षेत्र पर भी विशेष बल दिया गया है। साथियों, एनडीए सरकार ने पिछले 10 साल में यह सुनिश्चित किया है कि गरीब और मध्यम वर्ग को लगातार टैक्स से राहत मिलती रहे। इस बजट में भी इनकम टैक्स में कटौती और स्टैंडर्ड डिडक्शन में वृद्धि का फैसला लिया गया है। टीडीएस के नियमों को भी सरल किया गया है। इन कदमों से हर टैक्स पेयर को अतिरिक्त बचत होने वाली है। साथियों, देश के विकास के लिए भारत के पूर्वी क्षेत्र का संपूर्ण विकास पूर्वोदय के विजन द्वारा हमारे इस अभियान को नई गति, नई ऊर्जा मिलेगी। हम पूर्वी भारत में कई महत्वपूर्ण इंफ्रास्ट्रक्चर जैसे हाईवेज, वाटर प्रोजेक्ट्स और पावर प्रोजेक्ट्स का निर्माण कर विकास को नई गति देंगे। साथियों, इस बजट का एक बहुत बड़ा फोकस देश के किसान है। अन्न भंडारण के लिए दुनिया की सबसे बड़ी स्कीम के बाद अब हम वेजिटेबल प्रोडक्शन क्लस्टर्स बनाने जा रहे हैं। इससे एक और छोटे किसानों को फल, सब्जियों, अन्य उपज के लिए नए बाजार मिलेंगे, बेहतर दाम मिलेंगे। तो दूसरी ओर हमारे मध्यम वर्ग के लिए फल, सब्जियों की उपलब्धता बढ़ेगी और परिवार के लिए पोषण भी सुनिश्चित होगा। कृषि क्षेत्र में भारत का आत्मनिर्भर बनना समय की मांग है। इसलिए दलहन, तिलहन की पैदावार बढ़ाने के लिए किसानों को मदद की घोषणा की गई है। साथियों, देश में गरीबी समाप्त हो, गरीब का सशक्तिकरण हो, इस दिशा में भी आज के बजट में प्रमुख घोषणाएं की गई हैं। गरीबों के लिए 3 करोड़ नए घर बनाना तय हुआ है। जनजातीय उन्नत ग्राम अभियान सैचुरेशन अप्रोच के साथ 5 करोड़ आदिवासी परिवारों को मूलभूत सुविधाओं से जोड़ा जाएगा। इसके अलावा ग्राम सड़क योजना 25,000 नए ग्रामीण क्षेत्रों को ऑल वेदर रोड से जोड़ेगी। इसका लाभ देश के सभी राज्यों के दूर दराज गांवों को मिलेगा। साथियों, आज का बजट नए अवसर, नई ऊर्जा लेकर आया है। ये ढेर सारे नए रोजगार, स्वरोजगार के अवसर लेकर आया है। ये बेटर ग्रोथ और ब्राइट फ्यूचर लेकर आया है। आज का बजट भारत को दुनिया की तीसरी सबसे बड़ी आर्थिक ताकत बनाने के उस पूरी प्रक्रिया में कैटलिस्ट का काम करेगा। विकसित भारत की एक ठोस नींव रखेगा। सभी देशवासियों को बहुत बहुत शुभकामनाएं।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. The markets have taken the budget in its stride with the change in the tinkering on capital gains. The markets did react negatively, but we're well off the day's low point now with the 65-point cut, recovered nearly 250 points on the day's low point. Well, all in all, it's a thumbs up from most people we've spoken to, but Saurabh Mukherjee, now founder and chief investment officer of Marcellus Investment, joins in. Saurabh, hi, thank you very much for joining us. Net, good budget, bad budget. Are you disappointed with tinkering of capital gains, or are you impressed that fiscal discipline has been maintained more than what we were expecting?
I think that FM ticked all the boxes I could have expected of her. I think she needed to take on this this kind of froth that was building up in the market. RBI and SEBI have been very clear that they're seeing too much money come into the stock market, too little going into the real economy. All credit to the FM for jacking up short-term capital gains to 20%. Secondly, she took on the employment challenge, the challenge of creating millions of jobs. She took it on head on. I saw 5 measures being announced to juice up employment. Even if 2 or 3 of those work, I think that's a meaningful step up. And thirdly, rural India has been suffering since COVID. I think there was a big allocation towards rural India as well. To fund all of this, obviously, Capex had to be throttled off. So I don't think there was any increase in Capex relative to the February budget, which I think is also sensible. I think government Capex has already gone up by 30% each year for the last 3 years. There wasn't obvious need to jack up Capex. There was plenty of need to jack up RevX and boost consumption, and she's done that. So full marks to the FM. I think remarkably well thought through, common sense oriented budget.
Well, it was a well-balanced budget, and while most people were worried that it would be have some shades of populism, that didn't actually happen. Madhusudan Kela, founder of MK Ventures, now joins in. Hi, Mr. Kela, it's Samina joining in. First up, quick take on what did you make of this budget? There was tinkering on capital gains, but we've been expecting that now for a few years. Markets have also so far taken that in their stride. Or at the same time, it's not been a populist budget. It's focused on agri, it's focused on employment, a 5-year budget in every sense of the word.
Yeah. I mean, I would say the overall it's quite a good budget. It really focuses on a lot of long pending issues like employment generation, the deep reforms which are needed in agriculture sector, the overhauling and making changes in long pending income tax laws, and really creating, opportunities for youth in on the whole. So, and at the same time, on the face of it, when you look at the number in the budget speech, they looked very large, and it looked like quite a populist budget. But when you go into finer details, I think they've done a commendable job of sticking to fiscal discipline, of not only sticking, but basically lowering down the fiscal discipline, the fiscal deficit, also ensuring that the government borrowing over a longer period of time as a percentage of the GDP will go down, which will argue very well for our long-term rating. So on the whole, it's quite a good budget. Coming down to markets, of course, markets have had a very fabulous run in the last 3 years, and more specifically in the last 6-9 months. The market had some reason for small corrections here and there, and that came in the form of short-term capital gains and also some increase in long-term capital gains. Also, it was, you say that it was expected, but I was certainly not expecting it in this year at least because the government fiscal situation going into the budget was really, really good. However, I think they have taken a larger call of ensuring that the money really goes into the real economy and doesn't go all in the stock market, and which is why they have actually brought down all the asset classes and categorized at 12.5% long-term capital gains so that people can invest into other asset classes as well. And so they have made it as attractive as the equity is. And the second point is also they have lowered down the duty on the gold so that some amount of investment can even go into the gold. So I think those measures coupled with this long-term and short-term capital gains tax, it basically indicates the government intention to ensure that the saving must get distributed and not go only into an asset class. So on the whole, I'd say it doesn't really, it argues very, very well for the long-term growth of the country, and it doesn't change my stance on the stock market from a medium to long-term perspective.
Absolutely. Thank you, Mr. Kela, for that. Stay with us. Let me quickly move to Saurabh. Saurabh, this is Harsh here. Saurabh, has enough been done to kickstart the corporate Capex cycle? Because that was one piece where the market really had their eyes out on where the budget is concerned.
I mean, look, corporate Capex, I don't think the government can do a lot more than they've done. The main thing I thought they did was by making it unattractive to do buybacks. I think the FM is very clear. If you now announce a buyback, you'll actually be taxed not just on the amount or not just on the capital gains, but the investor will get taxed on the entire payout. I think that'll put pay to any corporate buybacks this point in. And since dividends were already taxed, the incentives are now there for companies to spend the money on Capex rather than dividending it or blowing it on buybacks. And in parallel, by keeping the budget deficit under control, by pulling back the government's borrowing, the government has reduced crowding out. The 10-year bond yield should be coming down. Interest rates are likely to come down in the next few months. So the government has done everything possible from a fiscal standpoint for private sector Capex. Ultimately, it's a free market economy, and it's up to our promoters and our industrialists to do the needful. I don't think that in a free market economy, the government can be expected to do more than what was already done in this budget.
Okay, I take your point. Mr. Kela, both from a private sector Capex perspective as well as from a personal tax perspective, do you believe enough has been done to spur consumer spending as well as private capex spending?
There is never enough, you can say it is being done, but I think whatever they could do, they have done. Ultimately, we have to also understand they are also operating within the constraints. Like budget is nothing else but a balancing of income and expenditure. So whatever is your income is what you can spend, making sure that your fiscal deficit doesn't go beyond a point. So I think adequate is being done. They have addressed quite a few issues which were really pending in terms of economy, the biggest being the job creation and the opportunities which are being created. It's such an innovative scheme actually. 500 companies will hire internship and that will go into the CSR budget. That will really encourage a lot of companies to hire younger people and provide employment, which is actually absolutely the need of the hour. So in a way, I would say a lot is being done, and now it is left to investors and entrepreneurs to take the risk and do their ventures. Right? What can the government do beyond a point?
Right, Madhu, and you're smiling away, which makes me really believe that you're genuinely impressed by this budget. But if job creation is the focus for the next 5 to 10 years, and as an equity market participant, how would you play this employment boom? Would it be consumer stocks? Would it be auto stocks? Where would your bias lie if you're looking at investing in this market for the next 2 to 3 years?
I will not go one-on-one to honestly to look into opportunities because of A move or B move. Why? The reason why I'm smiling is because it is business as usual for us, right? We are back to, because, before the budget, there are lots of rumors which go on, this FNO will get this taxation, that taxation. There are a lot of things which go around the budget. Once the budget is passed, at least you know that it is life as usual. So I would say that it is back to really going to the drawing board and really being able to identify bottom-up opportunities which will arise from various sectors. At this point of time, I can't thumb the table and say that I will buy a particular sector or B particular sector. I will look for bottom-up opportunities. Within the sector, I will keep a 3 to 5 year horizon, and I will keep my return expectation as moderate. Considering the fact that last 3 years we have made really extraordinary money, that the focus would also be to ensure that we don't extrapolate that kind of returns in our mind and make sure that we are investing with moderate return expectation and not what we have gained in the last 3-4 years.
Right. Saurabh, you want to comment on that as well? We've borrowed returns from the future, and that's a given with the kind of rally these markets have seen. It's a raging bull run, to say the least. There is a sense and quarters of the market, people like you do believe these are expensive markets and a correction is much overdue and maybe also healthy for the markets. Earnings have come our way, most of them have at best met street expectations. Do you feel now is a good time to take some money off the table and then probably, come back with different vigor, but just wait it out for now, exit, take profits off and then reinstate or reinvest those funds at a later stage?
Actually, it's a very interesting market. If you look at high quality companies, they actually haven't run up. So we're large investors in HDFC Bank, Asian Paints, and both stocks I think have given close to nil returns. Even companies, high quality companies which have done reasonably well, say a Titan or a Divi's Lab or a Dr. Lal Path Labs, they've had reasonable runs. I don't think there's been a blockbuster bull run in a Titan or a Divi's Lab or a Dr. Lal Path Labs. Where you've seen crazy rallies, utterly unjustified rallies in my view, is a whole bunch of PSU related names, a whole bunch of power and infrastructure names. And there's clearly, those valuations are sort of from different planets. So there's two parts to the market. If you strip out the low quality rally, if you strip out the rally in low quality stocks, the Indian market actually is quite attractively valued. As I'm sure everybody watching knows, the HDFC Bank is trading at a 20-year low on PE multiples. Asian Paints is trading at its long-term PE multiple. So I think it's a good place to be. It's a good time to be buying quality. As I'm sure everybody also knows, we are invested in it through our PMS. I, as an individual, my parents, several thousand of our clients. And that's my point that I make to global investors as well. Strip out from India the low quality stocks rally, and the Indian market is not expensive. The The economy is in good shape. Take a long-term view on India, put money in India, put money in great Indian companies, and it will be in great shape for many years to come.
Saurabh, we'd have loved to chat with you longer, but I guess we'll have to wrap up on that note. We'll hopefully see you soon. Very quickly changing gears, we also have Dr. Ashutosh Raghuvanshi, MD and CEO of Fortis Healthcare now joining in. Dr. Raghuvanshi, thank you very much for joining us today. Dr. Raghuvanshi, key takeaways from this budget, what stood out for you and what disappointed you?
For the healthcare sector, I think it was very disappointing. The fact that this budget did not include healthcare as a priority itself is something very disappointing. None of the long-standing demands have been addressed. The overall allocation, though, has been increased by about 12.5%. But that was on a low base. I think what is required is much higher. So those were the sort of negatives. I mean, there are few positives as well, and some of the custom duties on import of X-ray tubes, for example, will also help the local manufacturers to increase their production. Cancer drugs, there are only 3 cancer drugs, though, which have been included, but nevertheless, that is going to have an impact. Some of the other schemes which have been announced for the employment side on the internship and on the women's development, I think those would have indirect effect on the entire industry, and healthcare would also be included in that.
Raghuvanshi, I guess this is more of a long-term plan, right? If you create employment, you improve earning capacity for a large part of this country, which then, of course, enables them to go on and spend on healthcare if and when there is a need. But we'll talk about that in a minute. These 3 cancer drugs, which have got a little bit of a waiver on custom duty, how does it impact a company like yourself? And we don't know much about these cancer drugs, but if you can walk us through it, it'll be interesting to understand what it means for the healthcare sector, if it does at all.
Yeah, no, it definitely means a lot for the patients. And as you know, the cancer therapies are generally expensive. These 3 drugs are essentially imported, and hence they are even more expensive. There are no equivalents available in the country. And it would benefit the patients directly. But as far as the industry is concerned, it will not have an impact because these are mainly pass-through costs.
Right. Thank you, sir. Stay tuned. Of course, with us, we also have Mr. Rajan Bharti Mittal, past President FICCI and Vice Chairman at Bharti. Sir, let me first come to you with regard to your 3 key takeaways, 3 key positives and 3 key negatives from the budget, which you found for this particular budget, 2024.
I think the 3 top things, if I were to say, manufacturing, especially the SMS and MSMEs have been taken care of, job employment and agriculture. I think any growth path that this country has to move towards Viksit Bharat, manufacturing and agriculture have to play a very, very key role. So I think that, I would say, is probably the top tier for us to say how this budget has been panned out. Of course, the Mudra scheme, the women empowerment, that also has been kept in mind. Especially manufacturing on the electronic side, that's heartwarming because I think India can become a manufacturing base more and more for the electrical electronics, which should happen now. All the PLI schemes have shown that the growth can happen in this country. So I think these are the good areas, of course, keeping in mind that fiscal prudence still be kept in mind. If I have to say that there is something which the industry, especially telecom industry, wanted, which has not been met this budget, and we hope that in future some course correction should happen, is on the telecom levies. We believe that telecom levies are far too outstretched. They need some rationalization over a period of time. Of course, the space industry has been spoken about, the small nuclear industry has been spoken about. We will have to see the fine print on that. Lastly, the finance minister spoke about the less of litigation and ease of doing business and taxation being part of that. That's I would say, a good note And I hope that when we see the fine print, it starts working towards lesser and lesser litigation.
So Mittal, I'm just going to ask you to step out of the telecom space and talk to me as an industry representative. There were lots of corridors in the industry that were expecting PLI schemes to be either extended or more sectors to be added, because this is one scheme that's actually worked really well in our country. And of course, there's also expectation that, that sunset clause for new manufacturing facilities would be extended. There has been nothing said on both those fronts. Is there a disappointment from the industry that none of these two clauses have been fulfilled? Because this is what you need to do to encourage private capex, right?
No, I fully agree. As I said, two sectors which have to add to the growth, agriculture and manufacturing. There is no doubt in my mind, if GDP has to grow, India has already stretched on the services side. So these two pillars have to contribute. And my belief is, as we're going to see budget, 6-7 months down the road, the course correction will happen. Maybe more PLIs are added. But I think the government also wants to make sure that the PLIs which have been given to the manufacturing sectors are fully utilized. They are probably also going to be watching which all industries who have utilized the PLIs have functioned well, what course correction needs to be done. So I would say this would be a work in progress rather than saying that is come to its fruition either way. So we'll have to watch this space.
Good. Mr. Ashutosh, if I can come back to you, just with regard to healthcare, as well as expanding healthcare for all, what more needs to be done in coming budgets, maybe over the next 2 to 3 years? We've of course built a good base, but from here, where can we go?
Of healthcare in this country, which needs to be addressed parallelly, the public healthcare system and the private healthcare system. The private healthcare can never become a substitute for public health in the larger context of the nation. And there we would have expected that there were significantly more allocations made for the purpose of the Ayushman Bharat scheme and the digital health mission. There was no specific mention to those. On the other hand, as far as private healthcare industry is concerned, there are several aspects which need to be addressed, which have been long-standing demands of the healthcare sector. One of them is the rationalization of the GST structure, because it being exempt, we do not get any input credit. And that actually results in a higher costs for the patient. So that is very important factor which needs to be addressed. And there are also several other measures which the government can take to promote the infrastructure being created in tier 2 and tier 3 cities where the availability of adequate infrastructure is not there. And for that, certain schemes of PLI, etc., could be tailored, which the private sector can sort of catalyze and use them as basis to create further infrastructure in those areas.
All right. Thank you, Mr. Mittal. Thank you, Mr. Ashutosh, for all of those views coming through. We're having a conversation in parallel with Mr. Vijay Kedia as well. Let's quickly dip into that conversation. Tamanna having that conversation.
सबसे बड़े नाम सबने आकर कहा है कि वो इस बात से डिसअपॉइंटेड हैं कि लॉन्ग टर्म कैपिटल गेन्स टैक्स बढ़ाया गया. एफएनओ वाली एसटीटी से ज़्यादा परेशान नहीं लोग हैं, लेकिन इससे डिसअपॉइंटेड हैं. आप एक विजय केडिया बोल रहे हैं कि आपको इससे कोई फर्क नहीं पड़ता है. यू आर नॉट डिसअपॉइंटेड. डू यू वेलकम इट?
ऑफ कोर्स आई डू वेलकम. देखो, कंट्री जिंदा रहनी चाहिए मैडम. कंट्री जिंदा रहेगी तो शेयर बाजार जिंदा रहेगा. इकोनॉमी बढ़ती रहेगी तो शेयर बाजार बढ़ता रहेगा. शेयर बाजार बढ़ता रहेगा तो मेरी भी प्रगति होती रहेगी, मेरी भी वृद्धि होती रहेगी. मैं खाली अपने बारे में अगर सोचूं कि मेरे को टैक्स नहीं देने का है, तो ऐसा तो कैसे होएगा ना. फिर तो कंट्री बंद हो जाएगी. तो मैं इसके एकदम फेवर के अंदर हूँ. मेरे को लगता है कि 12.5% उन्होंने कम बढ़ाया है. अगर आप 15% भी, मैं तो सोचता था 20% करेंगे. मैं आपको सच बताता हूँ, मेरे मन में तो ऐसे लगता था कि बाकी जो दूसरी एसेट क्लासेस सब में 20% टैक्स का स्लैब है लॉन्ग टर्म का, तो क्यों नहीं करेगा. एक आपको एक एग्जांपल देता हूँ तमन्ना जी. कनाडा के अंदर में कोई कंपैरिजन नहीं है, कनाडा और हमारा कोई कंपैरिजन नहीं है, लेकिन खाली जो लोग बोलते हैं ना, कई लोग बोलते हैं कि दुनिया में कहीं ऐसा नहीं है। कनाडा में 50% टैक्स है मैडम, लॉन्ग टर्म कैपिटल गेन टैक्स 50% है। चलिए अपना उनसे कोई कंपैरिजन नहीं है। आदमी क्या ना दुख के साधन।
कनाडा में हेल्थ केयर दे रहे हैं, आपको फीस नहीं भरनी है बच्चों की, आप बुढ़ापे में आपका ध्यान रखते हैं। यू रियली कांट कंपेयर विद कनाडा।
एग्जैक्टली वही मैं बोल रहा हूँ, कंपेयर नहीं कर सकते। तो आप ये भी सोचिए ना, 147 करोड़ आदमी के अंदर में फिर 1,69,000 आदमी 45%।
So that conversation happening, but let's quickly go across to N. Jayakumar, who's joining us, MD and Group CEO at Prime Securities. Mr. Jayakumar, talk to us. You were constructive on pharma, and just first give us your views with regard to the budget itself.
Any kind of disappointment about taxes, etc., I think, frankly, too small to even mention. The fact is, taxes have gone up a little bit, but those who are making the kind of money that they are making in the markets, if there is in some sense a redistribution of that wealth through the government, which means you pay higher taxes and the government then channelizes to a whole bunch of, whether it's social security, first-time employment program to generate employment in the country, addressing youths, I think it's an extremely noble way to do it. And I think the fact that it is finally tax on gains, let's not forget that it's on higher income or on income that you generate that you're paying this tax. So I personally have absolutely no balls to pick on this. We can go down to the fine print and to say that whether, for instance, buyback is the same as dividends, etc. Those may be fine prints that we need to wait for before the end of the day to get clarity on. But the fact that tax rates have been moved up slightly, I absolutely have no issues on this. It's a different matter that nobody expected it. But it doesn't mean that everything that you expect must come through. And let's be very clear, the markets have been very kind to a lot of people and to all the people who've done their SIPs, etc. So they have to pay 2.5%, which is a 25% higher taxation on long term and 15 going to 20 in the short run. I do not believe, I repeat, I do not believe it's a problem. I think the distribution of that in the hands from the government to the hands of the necessary and the needy, to the needy is absolutely necessary, because really what we must see is a far more inclusive growth than just South Bombay, South Delhi, and a few pockets making money as a result of market movement. I think this has to be more inclusive growth, and I think the foundation stones have been laid for it, whether in terms of a slew of these programs for first-time employers, for promoting employment amongst youths. Ultimately, you don't want the demographic dividend or the demographic boon to become a demographic bane if you can't give employment where it is needed. And to generate employment and to foster that, if any schemes have come through and it means that certain rungs of the population have to pay, I am absolutely okay with it. Number one. Number two, I think there's substantial emphasis on infrastructure. There's substantial emphasis on public investments, and they're hoping that the public sector investments, they're hoping the private sector also, keeps pace. I, for one, believe that the collections through taxation would be far higher than what have been the estimates in the budget. So overall, I'm very happy with the budget, largely because nothing much has been tinkered. And you could argue that the taxation increase could have been avoided, but I think a signaling had to be given that for more inclusive growth, different sections of the society need to contribute. And from that signaling perspective, I believe there's nothing wrong with this, and too much airtime and PRP has been spent by channels on the fine tune, on the fine print about taxation aspects and what the base, etc. is. That's something that we can always figure out later. But the broad direction about what this government wants to do in the next 5 years has been well laid out, and I'm delighted for it.
Right. We also have with us Motilal Oswal, MD and CEO Motilal Oswal Group, joining in. Hi, Mr. Oswal. This is Samina. Sorry to have kept you waiting. but it's just turning out to be a very busy afternoon. What have you made of the budget? Capital gains has been increased, but that translates into 35 basis points of gains, additional gains or earnings that an individual now needs to make to accommodate for that increase in capital gains. Are you impressed with the budget? The fiscal consolidation was better than expected. The budget did not tilt too much towards populism. And of course, it fixed the capital gain situation at a time when we're pretty much in a Goldilocks scenario.
Yeah, so if I have to, I think, summarize about the overall budget, I would say that there are very minimum changes overall. And of course, I think there's a fiscal discipline. Absolutely, numbers are far better budgeted, which is good for the country. And overall, I don't see really, I think, many changes really, except few changes on the capital market side. So capital market gains, short term, long term, and STT. Of course, I would call it absolutely that there can't be any gains without any pains. So it's a capital pain budget in that sense from long term, short term, and STT perspective. But I think it was more on the expected line. But I think more important will be that how the whole regulatory changes comes in next few weeks about the overall any new restrictions or any kind of new changes happens, the way the future and options, especially the volumes are happening. So market definitely would look forward to those changes, and these in any case more or less I think not big change, but to the extent really I think it is a change, and global investors, domestic investors would like to see the continuity of policy on this side. Because if you have to look at the overall, just the huge number of people are coming in, but still if you look at the percentage of household savings coming to the market is less than 5%. So if we want to encourage more and more people to come here and invest for long term, especially their savings, then definitely there should be stable policies, and there should be some kind of encouragements for the investors who actually invest for long term. I have nothing really to say about the STT on the future option. That's okay, but I think for long term investors, especially capital gains tax, I wish they should not have any changes.
So, Mr. Oswal, just with regard to STT, I want to try and cap this tax angle off. Do you believe that this will dissuade investors from engaging in FNO? Do you, of course, you head and lead Motilal Oswal Group, and therefore maybe in the most relevant position to answer this.
Yeah.
It will, okay.
Yeah, it would, because the cost of transaction will definitely go up.
Right.
So in that sense, definitely it will make an impact, because people trade for very small gains or small amount of gains, and that's where it is going to impact them.
Right. And sir, do you believe on the policy side of things, enough has been done in this budget to push consumption?
No, I think the way things are happening, if I have to look at medium to long term, budget actually is becoming more a non-event, except few cosmetics, which is the right thing to do, because it brings predictability to the whole kind of, I think, policy environment. So I think really we are on the right time.
Mr. Jaikumar, I'll come to you now on what you made of the budget as a whole. While you did say that it's pretty much ticked all the boxes, from a portfolio standpoint, do you feel like it's back to business pretty much now, and the markets will have digested the change in capital gains, and of course the focus will be once again on earnings and fundamentals, and most importantly valuations, given how stretched we are right now?
You know, my budget take usually is budgets are nothing but a speed breaker on a highway. On a highway, you don't expect speed breakers, but if you do get it, you need to take the bump and move forward. I think in every which way the direction is clear, direction has already been laid out. I don't believe the budget has to that extent delivered anything dramatically different. Tinkering around here or there, making changes in customs duties, etc. That's something that they do every year. which is digested well before even the market shut. Sometimes you wait till the end of the day to read the fine print. So from my perspective, nothing much has changed. If it's business, it's back to business as usual. We go back to trying to make investments, by reading balance sheets or understanding businesses. So the entire thing about, whether, for instance, the FNO trading will get impacted as a result of retail not participating, I certainly hope that that's what happens. People don't understand the risks associated with FNO, and to the extent they don't and they continue to participate, they've been losing money.
Right.
My own assessment is that anything that deters this, in fact, greater deterrence should have been put in place, and any FNO trading that needs to be done either needs to be done through professionally or through mutual funds who should be offering these schemes. So I don't, for one, have will lose my night's sleep on any of these. I think the right deterrents are in place, and more importantly, the direction that the government has laid out has not changed over the years and continues to be as robust, but it's far, far more inclusive than it's ever been, or at least the pronouncements are making it far more inclusive. We expressed similar sentiments when DBT, etc. came in, but the fact that direct benefit transfers have made the kind of difference through the JM, Trinity, etc., indicates clearly that this path with the government, giving to of going down the path of inclusivity, I think is a great step forward. And I, for one, welcome it. I mean, just look at the kind of social unrest in different parts of the world. I mean, clearly you don't want disparity to widen to such extents that this becomes something that the Indian folks also get to see. So given all that, I'm very happy with the budget, and I have, and I think we'll move on to business as usual and speak less about the budget starting tomorrow.
Right. Jay, on that note, from the start of this year, it was all about Modi stocks, PSB. So railway, fertilizer, defense, expectations of big bang announcements coming in the budget once again for them. And those stocks have ran up. They've doubled down in the last 6 to 8 months. From where we stand today, and because it's back to business, would you still, were you ever overweight on these sectors? And if you were, would you remain overweight? Could PSBs continue to gain only on back of fundamentals from here on?
So I think the easy phase of the bull market is over. Now we need to go back to basics. We need to identify sectors that are materially benefiting. The fact that the overall market is a buy on dips still remains the thesis as we speak. The fact that the overall market still affords opportunities is true. But I think we need to be far more nimble in terms of the sectors we choose. And most importantly, it goes back to basics. So whether it's PSU stocks or non-PSU stocks, I think I don't want to talk stock specific, but sectorally, every sector affords opportunities that people should look at. So as I said, this is something I don't want to talk about, which is stocks. But am I bullish on the markets? Yes. And there are enough sectors and stocks that I kind of look forward to continuing to own over the next several years.
All right. Also have Gautam Trivedi joining us, founder, managing partner, Nepean Capital. Gautam, first off, welcome. It's how do you assess the budget?
Yeah, I actually like the budget, and frankly, the fact that it was not populist, strong emphasis on agricultural, rural, strong emphasis on infrastructure, urban housing, etc. So, frankly, I like the budget.
Okay, and what changes in terms of thesis yesterday versus today and going forward for the next 2 years in your view?
Yeah, so I think the short-term capital gains tax being increased to 20% was indeed a surprise. There was a lot of chatter in the market about long-term capital gains tax being increased from 12 months to 36. That thankfully has not happened. I think a 10 to 12.5% or a 2.5% increase really is not going to move the needle. But the fact that they've kept it at 12 months actually is very good. And as far as short-term capital gains tax is concerned, I'm actually not too disappointed with that either, because that, in a sense, will bring down, hopefully, the speculation. That alone, of course, may not necessarily bring down all of the speculation, but the fact is the SEBI will have to bring in some other curbs and make sure that people don't get hurt, because there are a whole bunch of new investors from tier 3, tier 4 towns who are new to the equity markets, have never seen a correction, and you don't want these people to have a disastrous experience in the equity markets. So, staying course with what the SEBI chief has said over the past few weeks, that the incremental money coming into the equity market should be focused on not speculation, but investment. And I think if the SEBI does bunch of things to control and curb the speculation will be actually a big longer-term positive for the equity markets.
Gautam, what else do you make of the budget in this case in terms of impetus as far as consumption is concerned? We've been talking about weakness in rural demand. Do you think there anything changes at this point in time?
No, I think the government has stayed focused, and hats off to Prime Minister Modi for this, has stayed on course and focused on basically doing the basic things, which is housing, infrastructure rollout. Obviously, electrification is part of that infrastructure rollout, and job creation. So I think these are things which the government has been talking about and doing for the past 10 years, and they seem to be on that momentum. So I think from that standpoint, the market was not at all surprised that these were the core tenets of the budget. There were tweaks. I think, for example, the lack of indexation going forward on real estate has taken a lot of people by surprise. But my personal view is that is for legacy properties, does not impact future properties. I.e., if you were to buy an apartment today, let's say in Midtown Mumbai, and looking at selling it 5 or 10 years from now, I don't think that's going to be a concern. That's going to weigh on your mind on buying the property itself today. But if you've inherited a property or your grandfather bought something for 1 crore of rupees and the value of that today is 30 crores as an example, so you have to then pay 12.5% on that 29 crores of capital gains. So those are issues for legacy properties, but not so much going forward.
Right, Gautam, interesting there because we just did some quick math on that just before we came here. Yeah. On that, just about 40 lakh rupees, if that was your cost of acquisition in 2002, then as of today, you're at a no profit, no loss in terms of tax. The tax cost is neutral if you sell your property at 3 crore. Of course, if the numbers change, this may also change. But basically, essentially, I think that the intention has been to keep parity in terms of the absolute tax amount that you're bearing, despite the 20% to 12.5% cut and despite indexation going away. And this is, of course, for real estate, gold, as well as non-financial assets. Of course, we'll try and dive deeper into that. But let me come back to Mr. Jayakumar, if I may. Mr. Jayakumar, talk to us about what you believe are the key misses in this budget, because you've spoken about so many positives. What's the possible 1 or 2 things which have been missed?
We do talk about divestments once in a while. We do, maybe greater clarity on that could have come through. Maybe there could have been some more measures on, steps taken for PLI, especially because your manufacturing thrust is so heavy that the PLI could have been looked at as a tool for getting there, because you then facilitate and foster domestic manufacturing. I think, especially in the context of employment creation, etc., this could have been definitely one further step taken. Other than that, my own assessment is there are a lot more things they want to do. They can do it outside the budget. So to expect a lot more than what has already been covered, maybe a little, uncharitable to them. So I'm, as I said, broadly okay. There are not too many misses from my perspective. 1 or 2 which I pointed out.
Gautam, the other big number from the budget is 4.9% fiscal deficit target, and with an aim to reduce this number further. But this comes with costs, right, going down. Your assessment on this as well?
To Jake's point about the one point that I thought also stood out, which was I wouldn't use the word negative, but that we need to actually assess, the government needs to address, is the lack of divestment, privatization / asset monetization. And frankly, if you want to get from 5.1 to 4.9, 4.9 to 4.5, either your tax collections need to significantly go up, or you should be able to achieve a significant amount of divestment of PSUs. And unlike a lot of Western countries who don't have a portfolio of companies to monetize or sell, or land to monetize, we have in our country, the government of India has so many PSUs that they can sell, especially in a market where the valuations of these PSUs have gone up The stock prices have gone up significantly, and we are in the middle of one of the biggest bull markets in the history of the world. So it's a little odd that the government has desisted from monetizing assets at this point of time. And frankly, if the government were to move in that direction, I'm sure a host of investment bankers, including Jay Kumar here, would help them sell these assets at a significant profit, and which could further reduce the fiscal deficit.
All right, Gautam, stay with us, but I'm going to take a moment to thank Mr. Jayakumar for joining us and taking us through his views and insights as far as this budget is concerned. With that, we also slip into a short break, and we come back with a lot more in just a bit. Stay tuned in.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. This, of course, is the special budget coverage we are getting you. Now, you've seen the Nifty. Of course, we saw a bit of a fall, but we've seen a full recovery now. So we're pretty much flat on the Nifty 50. We've, in fact, gone a bit into the green before just about coming back in the red. But, of course, we have Gautam with us. But let me also welcome on board K.K. Mistry, chairperson, and chairman rather, HDFC Life. So, Mr. Mistry, give us your first take with regard to the budget, please.
Well, in my view, the budget is very progressive when you look at it from a long-term point of view. There are many, many positive features of the budget which I'll highlight. I think the one reason why the market reacted negatively initially was the capital gains tax increase. But I think that is something which the market will pull aside, and I think in the course of time, things will bounce back. Now, what are the positives of the budget? I think at the very beginning, I said that there would be 6 pillars around which the budget would revolve. The first will be growth, and we have seen enough items or enough indications in the budget that the growth momentum will continue. Whether it's in terms of interest spending at 11 lakh odd crores, 3.4% of GDP, and so many other measures which have been announced. Second, I had said in the beginning was employment generation and skilling. And I think that there has been so much of focus in the budget on employment generation and skilling. And in a country like India, where we have a young population, this is, to my mind, an extremely critical and an extremely important thing that needs to be done. There are many measures announced. There are incentives given to sectors which are job machines, which create jobs like infrastructure, housing. There are so many things which have been announced for the housing sector. You have 3 crore new houses under the PMA scheme. You have the CLSS scheme, which has been broadly talked about, and I'm sure the details will be in public domain in the not too distant future. And there are many other steps for the housing sector. Encouragement to the states to reduce the stamp duty rate. Then there is enough for consumption, to encourage consumption. There's more money kept in the hands of people. Standard deduction, for example, has been increased, and various other measures have been announced to put money in the hands of people. This will lead to more consumption. Consumption will lead to more demand, and demand will lead to manufacturers and service providers increasing their capacity and therefore being able to provide more, which in turn will create enough jobs on its own. Then there are incentives for the rural economy, agriculture, a number of measures to improve productivity in agriculture. Then there are measures for the manufacturing sector. And last but not the least, I think extremely important is fiscal discipline. And we've seen that there has been a consistent decrease in the fiscal deficit every time we look at the budget. This time the fiscal deficit is kept at 4.9% against the 5.1% which was mentioned in the interim budget, and for next year the target is brought down to 4.5%. So I think these are all extremely positive measures when you look at it from a medium to long-term perspective.
Okay, KK Mistry with us. Sir, stay on with us. I just want to get a quick word from Mr. Anish Shah as well, FICCI President, who now joins us. Mr. Anand Goenka also with us. So we are getting a great panel of corporate voices on right now, even as we speak. Welcome, gentlemen, to NDTV Profit. So good to hear from you on what is a big, big day. Mr. Anish Shah, let me begin with you. A lot of push on employment generation, and some of it now becomes the responsibility of the private sector to take forward as well. I want to get your first take on that. The internship scheme, the incentives for hiring new employees. How do you look at all of that?
These are all steps in the right direction because the budget really focuses on short-term and long-term growth for the economy. The short-term comes in through various measures around consumption. The reduction in taxes at the income tax level is a positive in that aspect. And long-term through skilling, through infrastructure spend, Capex spend. And it is right that the private sector has to now step up and partner with the government to drive this growth. This is also on the lines of the Viksit Bharat agenda that the government has laid out, and that is a very positive one because it really talks about Make in India and India being the manufacturing hub for the world. And these are all steps that are headed in that direction, and it is the government and private sector that has to partner, work closely together to make this happen.
I'll take a quick view from Anand Goenka as well. On the budget, what would you say, Mr. Goenka, was one positive surprise and one negative one?
I'd say one positive surprise was certainly the focus on skilling and job creation. That has been the need, and I think the fact that there's been so much of impetus and focus on that, that's extremely positive. I think one area that we hope to hear a little bit more on was on the PLI scheme, but I do also believe that there is a fair amount of the PLI could possibly run on its own, and there could be announcements separately over time. So that would have been nice to hear from the government on.
Okay, so PLI schemes leaves more to be desired. Mr. Anisha, just, not just on PLI schemes, not too much there, but the fact that Capex didn't really move up post the interim budget, was that something that you were hoping for? Along with that, the 15% corporate tax rate sunset clause not being moved forward, were those a couple of things which I think were on your wish list and didn't come through?
So if I look at it overall, Capex is still 3.4% of GDP. And I think the message is that private sector has to step up, which is in many ways a fair message. If I look at aspects overall in the budget, the focus on infrastructure, on roads, and the focus on skilling, I think all of that is positive in terms of an economic growth focused budget. And therefore, on balance, I would look at that as very positive.
So on balance, that is positive. Gentlemen, if you will allow me, I also want to get Mr. K.K. Mistry into the conversation. He's with us here as well. Mr. Mistry, great speaking to you after a while. Tamanna here. I'm trying to understand just from also specifically real estate sector point of view, has the back of the envelope calculation taken place yet in your office on what this perhaps means? The fact that indexation has been removed, but the long-term capital gains tax has come down. Some are seeing it as a negative for real estate sales. Some are seeing it as no real impact.
I don't think there is any impact at all, honestly. I think there is a lot which has been done for the housing sector. The increased number of new houses which will be built under the PMAY scheme, the CLSS benefit which will come through, the 10 lakh crore or the amount that will be spent, all that will come through. And as far as capital gains,
to ask questions, and we will try to take most of the questions in this press conference. Ma'am will directly answer your question without any preliminary statement. Over to ma'am. Over to question. Anybody? All question 71, please.
मैम तरुण फ्रॉम जी बिजनेस। मैम आपने आज के बजट में शॉर्ट टर्म कैपिटल गेन और लॉन्ग टर्म कैपिटल गेन दोनों के रेट्स को बढ़ाया है और रियल एस्टेट में आपने इंडेक्सेशन के बेनिफिट को ख़त्म किया है। तो मैम क्या हम माने कि जो इक्विटी है अब आप उसको बाकी एसेट्स क्लास के बराबर लाना चाह रहे हैं, इस वजह से आपने लॉन्ग टर्म कैपिटल गेन के टैक्स रेट को 10% से 12.5% किया 0.5% किया।
First of all, thank you very much for coming here. After having heard the budget, I chose not to make an opening statement because you've heard me almost for 1.5 hours, and I'm sure you have you're eager to know what is in the budget and also seek clarification. For your just for a matter of drawing your attention, we put up a single slide which has used the word employment as an acronym to capture that is everything in the budget. So each letter actually highlights the important points of the budget, and we can elaborate more on that a bit later, but employment captures everything to do with this budget, and I would like you to, for a moment, spend a time on it. And deriving from that, everything which has been said in the budget falls in place. But with that said, yes, your question is on the point there is we wanted to simplify the approach to taxation, also for the capital gains. One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets. With that said, I'll ask Somanathan or who is going to elaborate, Sanjay, on the specifics.
So you had, there were, I think, two or more parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. If it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed, all unlisted are at 12.5% long term. And all are at 20%, equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up. And Sanjay, would you like to add anything?
One point I would like to add over here is that we also need to keep in mind as to the kind of people who are actually paying these taxes, the capital gains on the securities, the listed securities especially. And so over there, when we did this analysis for the year 22-23, we found that about 88% of the tax is actually coming from people who have an income of more than 15 lakh. 61% of that income is actually coming from people who have an income of more than 1 crore.
That is income on capital gains on this.
And we are all aware that otherwise, the standard rate is, about 30%. And for some, it can go up to 39%. So this marginal, very small marginal increase is actually impacting only those, primarily those who have an income of more than 15 lakh rupees per year.
Okay, number 3.
On capital gains.
Ma'am, Timsi Jaipuria from CNBC TV 18. You announced a very lucrative new tax regime with changes in tax slabs. A lot of new changes are there in the income tax side, on the revenue side. And in the speech, you mentioned that revenue foregone will be around 29,000 crore rupees, whereas government will now try to mobilize around 30,000 crore rupees. What will be these revenue mobilization measures, and from where do you think this foregone revenue will be recovered? If you can highlight, where are you foregoing the revenue and where are you going to recoup this revenue from?
First of all, it is not just because we've mentioned it in this budget, but the attempt to widen the tax net is something which we've been repeatedly saying, that India's tax net will have to be widened, whether it is in the direct taxation or indirect. Second, there are also now the PSU dividends which are improving because their valuations have gone up really high. And their performance is also now substantially increased. So revenue mobilization is not just tax-based, you have non-tax revenue mobilizations which are also coming up. Then we had, for almost now 3 years, been talking about asset monetization, which is not selling of assets, but optimum utilization of those assets which are lying in the form of unutilized stadiums or land which is available with PSUs which can be utilized for better purposes. That's a third one. Fourth, you're also looking at generating resources from newer areas. So in all those, the revenue is going to be mobilized better, and as a result of which the revenue foregone will be now made up for, is our expectation. We've said that in the budget. In my speech itself, I mentioned it. And I'm sure there are secretaries who will want to add to it. Sanjay?
Ma'am, I'll give the details. 37,000 crore, 29,000 crore in direct taxes and 8,000 crore in indirect taxes. So 29,000 crore direct taxes primarily comprises of 3 taxes, which is the increase in the STT only on derivatives, which is only on futures and options. And secondly, the buyback tax, which is to be now done in the hands of the recipient. While on the one hand, it will rationalize the tax and be more equitous and fair, because those who should be paying the taxes, higher taxes, in the higher income groups, they will pay higher tax, and those who are in nil tax category or in lower tax category, they don't have to pay a tax or a lower tax. While it does that, at the same time, it does bring in some revenue also, about 4,000 crore, and remaining, about 15,000 crore should come, from the capital gains taxes. On the indirect taxes, we are losing, as I said, about 8,000 crore primarily on the reduction in duties, especially in gold. There is a huge reduction from 15% to 6%. And then there is revenue foregone because of the personal income tax rates and the standard deduction being allowed in the new tax regime.
280, please. Backside, please. Give the mic.
Good afternoon, ma'am. This is Surabhi from Business Today. Ma'am, the angel tax has been abolished, which is a very welcome move. But just wanted to understand that one of the things the angel tax was also doing was checking money laundering concerns. So could you explain how these will be taken care of now? Thank you.
Thank you very much, and I'm glad to hear it is welcome. You've been raising this issue, as with many others outside of media, also saying, are you considering it? Although it was introduced during the UPA government, and it was introduced in 2012. 2 years had passed, and since after that, when we came in, we tried keeping as a good governance principle, government being a continuum, the tax continued. Although we tried giving carve-outs for startups and also making it simpler, bringing parity for the non-resident Indians, the way in which they've been treated as opposed to the Indian investments and so on. Today we've announced that we will indeed remove it. Exactly the details, Sanjay, would you want to elaborate on it?
Yes, sure, ma'am. So we should be aware that this is actually a tax measure. It's not really a money laundering issue, but money laundering issue was being tackled through a tax measure. So first of all, I want to clarify that this tax, there are other provisions in the income tax itself, first of all, to find out the source of these funds. Number two, there is already, the Prevention of Money Laundering Act, which continues to be in existence. So if there is money which is being laundered, money being paid as a bribe or for use in other purposes for terrorism, etc., there are enough laws, including the now the Nyaya Sahita, Bharatiya Nyaya Sahita, and the Prevention of Money Laundering Act to take care of those issues. While on the other hand, now some genuine money for investment, actually there is this deterrent provision no longer exists, while provisions for money laundering remain, and they should be sufficient to cater to it.
I would add that there are also certain provisions of the Companies Act which can be invoked if there is deliberate undervaluation of shares. So there are other legal remedies. The balance here is between preventing money laundering but accidentally also preventing investment. So that balance is what we are seeking to get it right.
211 backside. Yeah. Hello, ma'am. Prakash Predashi from ET Now. My question is, will the increased STT be applicable from April 1 or prospective? And if from April 1, will there be retrospective tax calculation for the increased amount?
It's not retrospective. It is with effect from 1st of October 2024. So we are giving sufficient time for the exchanges and the people, who collect this tax to put their systems in place to be able to collect it. It's not retrospective, it is prospective.
13, 11, 11.
Ma'am, Karishma here from Business Today. Ma'am, congratulations to you and everybody. Ma'am, my question is on this special assistance to Andhra Pradesh and Bihar. 15,000 crore is the number that you've given for Andhra Pradesh for this financial year. Is there further assistance that you are looking at, or is it going to be need-based in terms of the amount?
I've already mentioned in the budget speech that 15,000 crore is coming through the multilateral development assistance, which we borrow from the multilateral banks, whether it is World Bank or ADB or AIB, whatever. And I've also ended that paragraph by saying further assistance will also be extended.
There is no definitive amount?
No.
152.
मैम आलोक प्रियदर्शी फ्रॉम CNBC आवाज में मैम सवाल यही है कि जिस तरह से आप लोग न्यू टैक्स रिजीम को प्रमोट कर रहे हैं, इस बार भी आप लोगों ने स्लैब में चेंज किया, स्टैंडर्ड डिडक्शन बढ़ाया, तो ये मान के चलें कि न्यू टैक्स रिजीम के जरिए आप मिडिल क्लास को राहत देने की कोशिश की है इस बार। ओल्ड टैक्स रिजीम को लेकर क्या कोई सनसेट क्लॉज है? क्योंकि आपने कहा है कि जो इनकम टैक्स एक्ट है उसका हम लोग कंप्रेहेंसिव रिव्यू करेंगे, तो रिव्यू में क्या ये मान के चले कोई सनसेट टाइम आएगा ओल्ड टैक्स रिजीम को लेकर?
अभी मैं बोल नहीं सकती हूँ। जरूर हमारी इरादा ये है कि सिंपलर टैक्सेशन रजीम होना चाहिए, और सिंपल टैक्स रजीम की ओर अगर हम जा रहे हैं ये रिव्यू के द्वारा, वो ही हमारी मकसद होगा कि सिंपल कर दो। ओल्ड टैक्स रजीम को सिंपल करने के रास्ते पर ही ये नया टैक्स रजीम आया है। सनसेट होगा कि नहीं होगा वो अभी मैं बोल नहीं सकती हूँ, वो रिव्यू करने के बाद ही हम एक डिसीजन लेंगे।
और ये एक आंकड़ा मैं आपको दे दूं कि इस बार पिछली बार जो हमने परिवर्तन किए थे नई टैक्स प्रणाली में, तो 70% लोग अभी तक जो 4 करोड़ के लगभग हमारे पास में रिटर्न प्राप्त हुए हैं पिछले वर्ष के, 70% ने इसको प्रेफर किया है बनिस्बत की पुरानी प्रणाली को। तो बड़ी तेज़ी से लोग नई प्रणाली की ओर आकर्षित हो रहे हैं और हमारा यही प्रयास रहेगा।
Yes.
Ongoing
filing.
Not yet. I mean, more returns are coming in.
Yes.
271.
Hi, ma'am. This is Sumit Chaturvedi, ET Now. Ma'am, the corporate tax for foreign companies has been slashed to 35%. I want to understand the broad intent of this intention behind this decision, and what kind of benefits to economy, increase in investment you are expecting.
You've, in your own question, answered it. We want more investment to come into this country. So that is why it has been brought down.
$95.
Just to add to that, there was a widened differential between foreign and domestic companies which arose after the tax cut in 2019. When the domestic rates were cut, the foreign rates were not cut. So there was a widening of the gap. With today's change, there is still a higher rate of tax for foreign companies, but it is not now disproportionately higher than domestic. And therefore, this is something where, according to the feedback received from industry, we expect more foreign companies to invest now that this regime is adjusted in this manner.
Good evening, ma'am. This is Pal Singh from Outlook Business. So you have earmarked a significant allocation towards rural infrastructure today. So how much of a boost to consumption and overall demand are we expecting here from this allocation happening?
So it is difficult to quantify what would be the accretion to demand coming from. I mean, the obvious increase is whatever we have increased. But yes, would there be a multiplier? Probably yes. I think with the Awas Yojana Gramin and the Gram Sadak Yojana, these two do have a lot of multiplier effects as well. Traditionally, for capital expenditure, the multiplier has been calculated at somewhere around 2.5 to 3. In the Awas Yojana, it may be a little lower. But yes, there would be a substantial multiplier. I don't have a precise calculation.
But other than the Awas Yojana and Sadak Yojana, Gram Sadak Yojana, there's a major push towards the corridors. For instance, I mentioned in the context of Bihar, I mentioned in the context of Andhra, 2 corridors which are moving, one from Visakhapatnam to Chennai, the other moving from Hyderabad to Bangalore, Buxar, Purnia, and so on, and building of the Gaya node in the Amritsar to Kolkata are all towards building infrastructure in the rural areas in order that we attract more investment and enable transit of goods in those huge corridors. All these are essentially going to the rural areas in a big way. And therefore, it is not just through PM Awas Yojana and Sadak Yojana, but major investments in strengthening the corridors, building nodes, and therefore also in improving the rural infrastructure is happening.
11.
Ma'am, I'm Maria Shakir from NDTV and NDTV Profit. Congratulations for creating history today by becoming the only finance minister for having presented 7 consecutive budgets. Ma'am, my question to you is about the first-timer scheme, because as you said, that employment perhaps sums up the essence of this budget. Would there be more blueprint coming out as to how this first-timers scheme will be playing out, and what will be the role of private sector?
Just 1 minute. See, this Prime Minister's package that I announced has 5 different schemes. The first timers is, I would think, one of the very, very innovative initiative. So what we are doing there is to be able to provide first timers 1 whole month's salary as subsidy. And this will be put into their account as direct benefit transfer, but possibly in tranches. When an employer picks up a first timer, and this is through the EPFO that you get to know that they have paid their provident fund amounts, and therefore the first timer indicator that we are talking about will be established. So they can't just say one of the existing employee is a first timer and claim it. There are enough checks and balances in the system to make sure that indeed the first timer is coming in. And then the first timers will be put through that learning curve, and this will help them to acquire skills so that they become fully productive. This kind of a subsidy giving, 1, you give the first one month's salary. 2, you're also giving both for the employee and for the employer subsidy. So the applicable person for whom it is being given may even draw a wage up to 1 lakh rupees. But to the extent of 15,000 is what you're giving as a subsidy. The installments, as I said, for the first 1 month wage that you want to give will be done over 3 installments, direct into the first time employee's account. One compulsory measure that we are bringing in there is to make sure that the employee undergoes online financial literacy course before claiming the second installment from the government. So he may be a qualified engineer, he may be a diploma holder, he's a first-time employee in an office, he becomes a first-time employee and the employer also claims that he's been recruited. We try giving him the 15,000 rupees. He may have a salary of 1 lakh, but up to 15,000 rupees is what we are going to give. And in that, if you're giving 3 installments, the first installment will be given. But before he draws the second installment, he should undergo an online financial literacy course so that he can claim the second one. So we are not training him in engineering, we are training him in financial literacy. Post that, of course, the place where he goes to work, he's going to be working in any case. Then subsidy to be refunded if in case the employer removes him from the work within 12 months. So the employer gets a subsidy as well, but he will have to refund it if within 12 months this first-time employer has been removed out of the work. This will cover, and we expect it to cover, 1 crore persons per annum. And the scheme will run for 2 years. So up to 24 months, you can have new employees brought in, new first-time employees brought in, for whom the government will give 15,000 rupees as from our side, 1 month, what we think, 1 month's salary. Although his salary may be any amount, but to a cap of 1 lakh. And then he undergoes some financial literacy course, post which the second installment and the third installments can be withdrawn, put into his account. But most important is if the employer removes him within 12 months, the employer will have to refund the subsidy given to the employer. So that's how that scheme works.
278. If I may just add, details are available in the budget speech in the annexure on page 31. So there are details of all the 5 schemes in this package. If you go through them, there's considerable amount of detail which you can get.
Hi, good evening. This is Priyashmita from Informist. I have 2 points from the budget that I would like to ask. The first is nominal GDP has been pegged at 10.5%, and we have seen that growth is on a high momentum, and even the RBI has pegged growth at 7.2%, and the Econ survey said that it is going to be between 6.5 to 7%. So a 10.5% nominal GDP looks a little conservative. What is your view on it? And the second is that there's a mention that beyond FY26, you would want to reduce your debt to GDP. And you've mentioned that, the 4% debt to GDP it's a thing of the past. So what do you think is a sustainable debt to GDP or a desirable debt to GDP at this point? Thank you.
What was the first question again?
Conservative nominal GDP projection.
See, 10.5% could be a combination of 7% growth and 3.5% GDP deflator. So a combination of wholesale price plus consumer price could easily be 3.5%. That's a very likely scenario. So 7 plus 3.5, yes, it is slightly conservative, but I don't think it is way off what is likely. Or it could be 6.5% growth and 4% inflation as per the deflator. So I think the number is reasonable, slightly conservative, yes, but we would prefer to achieve the numbers. Second, on the path after 26-27, which has been outlined in the Finance Minister's speech at the end of the Part A. So the commitment, as she has mentioned, is to endeavor to reduce the debt to GDP every year. That is in future the fiscal consolidation path. What is the percentage that would result in that fiscal consolidation is not something that we are disclosing here today or can disclose today. It will depend on circumstances, but there is a commitment to lower the debt to GDP ratio. So if every year it has to be reduced, there will necessarily have to be a particular level of deficit which we cannot exceed. And that will depend on prevailing growth rates, interest rates, and the other parameters which go into the calculation of the debt dynamics. But I can tell you that it is most likely to be a figure not above 4.5%.
249. मैं सुनील सौरभ बोल रहा हूँ
मैं आप पहले तो आपको काफ़ी बधाई दे दूंगी, बहुत अच्छा बजट आपने पेश की है। दूसरा मुझे ये जानना है कि रेलवे के लिए क्या कुछ खास रहा बजट में?
Which organization you are from?
कौन सा पत्रिका से?
पेपर में हूँ, लोक भारती पेपर है।
सॉरी,
लोक भारती।
लोक भारती।
जी हाँ। तो पहले तो बधाई दे दिया हूँ मैं आपका, बहुत अच्छा बजट आपने पेश की है और रिकॉर्ड भी की है। 7 साल से लगातार आप वित्त मंत्री के रूप में काम। मेरा कहना है कि रेलवे के लिए क्या कुछ खास हुआ, क्योंकि कोई जानकारी हम लोग को अभी तक नहीं मिली कि रेलवे के लिए क्या गया है। दूसरा, मैम, रेलवे में सीनियर सिटीजन्स को कंसेशन मिलता था। आप यहाँ PIU में है, PIU जर्नलिस्ट को भी कंसेशन मिलता था। कोरोना में वो बंद हो गया। कोरोना को ख़त्म हुए भी 2-3 साल हो गए हैं, तो फिर से ये बहाल नहीं हुआ। क्या इसकी उम्मीदें हम लोग कर सकते हैं कि आगे बहाल होगी या नहीं?
रेलवे का जो एक्सपेंडिचर बजट है नेक्स्ट ईयर, इट्स 255,393 crores, which is the highest ever, and it's a very substantial increase in recent years. So that is a very large amount of investment in the railway. So I think there is a very adequate provision.
जर्नलिस्ट के लिए कंसेशन
ठीक है, सुना।
277 प्लीज।
इसमें सीनियर सिटीजन और PIB जर्नलिस्ट को भी जो स्लैब में रिवीजन हुआ है उसमें फायदा है। सीनियर सिटीजन को फैमिली पेंशन में स्टैंडर्ड डिडक्शन का फायदा हुआ है। रेलवे में, अच्छा ठीक।
हेलो मैम, दिस साइड हर्ष कुमार, दिस साइड फ्रॉम बिजनेस।
वो बजट का फायदा जो दिया है सर, वो भी तो मिलेगा सीनियर सिटीजन्स को और सबको, रेलवे में भी मिलेगा।
Hello ma'am, Harsh Kumar this side from Business Standard newspaper. Ma'am, during your speech you mentioned about the FDI liberalization. Can you give a bit detail about it?
We are trying to, since 2014, bring in ease of doing business in India, and in every sector where there was only 26% allowed for FTA, we raised it to 49, and then where it is possible we've raised it to 74, and so on. So there's been a consistent, continuing effort to relax our policy towards FTA. First it went sector by sector, then there was this approach taken so that most of which can go through the automatic route. So in that process, further simplification, if necessary, we are willing to do, is what is conveyed.
Also, ma'am, you have increased the Mudra loan limit to 20 lakhs, like that cap. So can we expect the increase in Shishu, Tarun, like their types increase? So how much it will be? Can you give detail on that?
We've said this only today. See how this works.
Okay, thank you.
I request you to please one question each person. 123, please. Here.
Shrimi Chaudhary here from Business Standard. I just wanted to understand that budget proposes withdrawal of equalization levy. So if you could just give some explanation of what led to that, what is the intention behind that, keeping in mind the pact between India and US which has ended on June 30th.
No, as the Pillar 1, Pillar 2 negotiations have been going on since 22. And since then, one of the things which was becoming more than obvious was, if at all we are going through this Pillar 1 and Pillar 2, which we intend to, the negotiations and the OECD, backed by the US administration, have all been pushing for this. We wanted a fair solution, so negotiations have been going on. But the point of contention from then has always been, should we collect an equalization levy then, if at all we are getting into this global understanding through the Pillar 1 and Pillar 2. In any case, for India, equalization levy also meant for those who are living abroad that you were holding it but eventually they're going to only adjust it somewhere. So in the interest of moving towards Pillar 1 and Pillar 2 solution, which the negotiations are still going on one aspect of it, on the other, in all probability, we are close to a conclusion. It was necessary for us, through the Parliament, to take steps to ensure that we are entering into that scheme of things without this equalization levy hanging on us, because this was important for us, but if it is a global system, this cannot continue. And therefore, with a positive approach towards the Pillar 1 and Pillar 2, we've moved forward to inform the Parliament that we would like to close this.
270.
I may clarify that it is only the 2% levy which has been withdrawn. The 6% levy which was earlier imposed, that continues.
What will happen to the tax collected so far from all these companies under this 2%
That has already been collected. We'll see. I mean, it is only this withdrawal is only prospective.
Ruchika from Business Standard this side. Ma'am, the miscellaneous capital receipts have seen an increase in this budget to almost 50,000 crore. Is there the miscellaneous capital receipts?
Okay.
Can you share the government's game plan as to how will we achieve this increase?
The miscellaneous capital receipts are budgeted as 50,000 crore, which was like 23-24 also. It was 51,000 crore, the interim budget. Now it's 50,000 crore, 24-25, and this combines with all kinds of receipts which are otherwise disinvestment receipts, asset monetization receipts, and other kinds, which will be clubbed with that. So this budgeted figure is 50,000 crore.
Ma'am, very good evening. Sapna Das here from CNBC. Ma'am, two questions. On the incentive like employment scheme that you have announced, 2 lakh odd crore is your overall fiscal envelope over the duration of the scheme. Could you give us a sense as to, we are already almost halfway through the current financial year by the time you pass the budget. So practically around 7 months will remain for the financial year. But any kind of an allocation that you have done for this scheme for this year, ma'am? One is that. And ma'am, just a corollary also on the miscellaneous receipts question, though not very much part of this budget, but nevertheless, ma'am, government had a very, kind of a bold privatization program. Do we understand that this is now being calibrated? That's it, ma'am. Thank you.
First question. Yes. As you rightly observed, there are only this is not a full financial year. The schemes have just been announced. They will now go through a process of quick design, appraisal, and approval. However, budget provisions have been made for these schemes, partly in the Ministry of Labour and Employment and partly in the Ministry of Corporate Affairs for the internship scheme. So from memory, I can be corrected. I think it's 2,000 crores has been provided for the internships in the Ministry of Corporate Affairs, and about 5,000 crores has been provided in the current year in the Ministry of Labour and Employment, but we stand committed to funding them fully to the extent that may actually be required. These are just very rough estimates based on how much time it might take to kick off. On the miscellaneous capital receipts?
Well, I think in the interim budget, FM had announced, we are going for a holistic strategy for management of equity in PSUs. And I think which includes, value creation and also, using the performance, the Capex, the dividends and consistent dividend policy and the capital management all together, and also the calibrated disinvestment strategy, which also includes listing and market dilution, but all together in a holistic way so that value maximization is there. I think the same strategy is going to continue.
122.
Hi, Rishabh with NDTV Profit here.
I have two questions. One on the space fund that was announced, the 1,000 crore fund. What will be the composition of this? Which will be the nodal agency, and what sort of startups will the government invest in? And on the NPS, you also mentioned that the NPS committee has made progress in the speech. Could you elaborate a bit on that?
So we have seen that there's a lot of interest of the private sector on participating in the space program. Hitherto, the participation used to be on being a supplier to the space program, but now development of the satellite, mounting experiments there, they're getting into that space. And if you recall, even FDI was opened up in that sector. This is an attempt that Indian entrepreneurs, Indian startup who want to risk capital to get into that area, that should be facilitated. We believe that the amount is 1,000 crore, but that can have a very large multiplier effect. And that's what the scheme announces.
On your question on the, I think your second question was on the government NPS, right? So as you know, there is a committee which is looking into it. The committee has done a lot of detailed calculations of the fiscal implications of different ways of addressing what are the expressed sort of priorities of the employees. We have been in dialogue with state governments. We have had discussions with each and every state government. We have met the staff side of the government has a staff consultative machinery, a formal machinery. We've had 4 meetings of that machinery to understand what are the staff's priorities. And our attempt is to design something that is fiscally prudent, but also meets what are the core priorities of the staff in terms of having a secured retirement income, which provides for their needs. So this is a balancing act, because obviously there are costs. The more you give, more expensive it is. And so we are at an advanced stage of working out various options, and we are also discussing these options with the staff side. Just to correct the budget estimate that I gave earlier, 10,000 crores has been provided in Ministry of Labour and Employment for the new employment schemes, and 2,000 in Ministry of Corporate Affairs. Yeah.
125. Good afternoon, I'm Nikunj from Reuters. A follow-up on that FDI facilitation. You said that government will take steps to facilitate FDI. The ECO survey also yesterday said that the government should import capital from China so that there's a right balance between investments and trade. So will the government also take steps to quickly facilitate investments from China that have been pending for long? And secondly, you've come up with an NPS for minors. So will that also have some sort of tax benefits to nudge people to enroll for NPS so that a pension coverage increases? Thanks.
See, Economic Survey gave its view on the investments from China. As things stand today, investments do go through the Press Note 3 process when it comes from China or from any of our neighboring countries. So that process is still on. Economic Survey has indicated that it might be time for us to open up and allow for. So that's a Economic Survey. I'm glad that the Secretary is seated here. It's normally an arm's distance. But that doesn't mean that I'm disowning the suggestion. You want to say?
In general, as you can see, our aim is tax code simplification and not complication. So beyond that, I don't have anything specific on that. But the general direction of travel is obvious. We are not creating more and more tax deductions for individual tax instruments.
Respected Madam, मेरा नाम नरेश वत्स है और मैं स्वतंत्र पत्रकारिता करता हूं। आज जो आपने किसानों के लिए और ग्रामीण क्षेत्र के आधारभूत संरचना के लिए काम किया है, उस पे 2 तरह की राय आ रही है। एक राय तो ये कहती है कि गालिब ने ये कहकर तोड़ दी तस्बीह, क्यों गिनकर नाम लूं जो बिन मांगे बेशुमार देता है। एक वर्ग तो इस तरह से तारीफ बजट की कर रहा है, लेकिन दूसरी तरफ प्रतिपक्ष के नेता राहुल गांधी ने कहा है कि आंध्र प्रदेश और बिहार पर जो दरियादिली दिखाई है, कहीं न कहीं ये लगता है कि ये कुर्सी बचाने का बजट है अखिलेश यादव जी भी ये कह रहे हैं, आप कैसे देखती हैं?
जिन इंडी अलायंस का मेंबर्स साथ होकर के भी 230 पार नहीं किया और जहां बीजेपी अकेला 240 तक पहुंचे और प्री इलेक्शन अलायंस के साथ आज सरकार तीसरी बार बनाए, प्रधानमंत्री जी का तीसरी बार, स्वतंत्र भारत के चरित्र में पिछले 60 साल में जो नहीं हुआ अभी हुआ है। कुर्सी बचाने के बात करने वाले पार्टियों थोड़ा सोच ले। उनके अलायंस 230 कुल मिलाकर कितने पार्टियां थे? 25, 26 पता नहीं, मैं गिनी नहीं, बट इंडी 37 पार्टीज कुल मिलाकर के 230 पार नहीं किया और वो बोल रहे हैं कुर्सी बचाने के लिए। जब प्रधानमंत्री मोदी जी तीसरी बार प्रधानमंत्री बने और देश के लिए इतना घोषणा भी कर रहे हैं जिससे भारत देश का हर राज्य सामने आए, डेवलप हुए, और 1.50 लाख करोड़ इस बार बजट में स्टेट्स के लिए हम दे रहे हैं बिना इंटरेस्ट 50 साल के लिए फ्री। फिनांस कमीशन तो हमारे उनके सजेशन में इसका जिक्र तक नहीं किए, हम ही कर रहे हैं स्टेट्स के साथ काम करने के लिए। हर स्टेट का उनके अपने अपने प्रोजेक्ट्स जो प्रोसेस के चलते हुए आता है उन सबको हम मानते हैं और ज़रूर उनको जो फाइनेंस करना है वो हम करेंगे, मगर जिक्र इसलिए नहीं किया बजट में कुर्सी बचाने। जब उनका टोटल को एक और बार चुनावी सीट जो जीते हैं वो 101 और बार उसको गिनकर देख लें, 37 पार्टीज कुल मिलाकर के कुर्सी बचाने वाले बात बोलने का अर्हत अधिकार उनके पास नहीं होता है।
121.
Ma'am, Meghna Mittal from Money Control. In the union budget, you have announced financial support to MSMEs for shift to clean energy and also a new mechanism for credit so that they do not go into stress and they do not turn into NPAs. Any details on that?
I'm so glad you asked this question. I'm really glad because this budget, and I don't want to say it because I've presented it, I'm so grateful that the Prime Minister looks at every sector and says, what are we doing for them? What are we doing for? This has been his approach always. But this time around, we've spent a lot of time understanding also from those stakeholders who had consultation with us pre-budget. And MSME's request it has been for now several years that when they reach the SMA 1 stage itself, they get to be very, very tensed because banks stop their finances, meaning banks no longer lend to them. They are stressed as it is. And if they are stressed as it is, and if there is this threat that the bank will not further give them working capital, sooner, by the 90th day, they become NPAs. In order to give them a good workable solution, and I'm indeed grateful to this entire team of secretaries here, they spent a lot of time also talking with RBI to see how best we can address this issue. And RBI has also a very well established framework which we are quite respectful of, where banks are clearly given a bit of a margin to handle MSMEs at the SMA stage 1 itself without pushing them to become SMA 2 stage and then at the 90th day announce them as non-performing assets. So what actually has happened now, having discussed with the RBI, is that we'll provide them with a fund which will help them to have some kind of government guaranteed liquidity, or the banks can then, on the basis of the guarantee being given, on the back of the guarantees which are being provided by the government, lend them working capital and keep them moving. And if they restore themselves, they're going to be better off. So on this principle, I'll certainly ask you or Wake to speak and explain it to you all.
as FM has already explained about the credit guarantee scheme, this will certainly facilitate the term loans without collateral or third-party guarantees. Then new assessment model for MSME credits, which will be based on their digital footprints and the kind of payments they are making, such as their PF contributions, salary payment, and other transactional data. This will help the banks in access to credit even during the stress period, for which some kind of support fund will be created, and based on the guarantee provided by that fund, they will be helped during the SMA 1, SMA 0 or SMA 2 periods. Then Mudra loans limit has been increased from 10 lakh to 20 lakh. Similarly, enhanced scope for mandatory onboarding in TREDS platform has been also reduced from 500 crore to 250 crore of turnover. SIDBI will also open more branches in MSME sectors.
In short, what it does is for the MSMEs, through this one budget, we've announced 8 different steps, each one of them addressing this particular problems with MSMEs face, and for which the MSMEs during the stakeholder consultation wanted us to give them some solutions. So specifically 8 of them have been designed to address that. So
I would just like to supplement 2 of the points. One is the credit guarantee scheme in the manufacturing sector of up to 100 crores for the acquisition of capital equipment, machinery, etc. So this is an idea which came from the MSMEs, as the Honorable Minister said, stating that typically MSME credit is for working capital, but they sometimes have needs to invest, and it could even be a new MSME enterprise which needs to invest in equipment. So the proposal in this scheme, which has also been discussed by a working group chaired by the Chief Economic Advisor with the Reserve Bank, with the credit guarantee institutions, is a self-financing mechanism. An MSME which wants to avail of a credit guarantee for this term loan will have to pay an initial upfront guarantee fee, followed by an annual top-up fee which will be based on the reducing balance of the loan. So there is no subsidy from the government which is envisaged in this scheme, unlike the CGTMSE, which is a working capital loan scheme where the government actually provides the corpus. In this case, the corpus itself will be self-financing, coming from pooling of MSMEs' upfront fees.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
All you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option.
Welcome, and you're watching a budget special coverage on NDTV Profit. You might miss Alex because it's the editor's cut, but I'm fronting it, and with me and 4 of my colleagues, we are going to try and tell you what the editor's take on this budget is. This is the top editorial team of NDTV Profit. With me, to my left, Sajid Mangat, to my right, Tamanna, Samina, and Muralidhar Swaminathan. Okay guys, let's try and set the basics of what stood out in this budget. Murli, you've had the most time off air, so let me start off with you.
Okay.
What did you make? What are the key takeaway for you?
Okay, so the most important takeaway is not about tax, it's not about capital gains tax, it's about the 5-year roadmap. Very clearly, that is what the agenda is. We should not look at it from what's going to happen now to your capital gains tax or real estate capital gains or income tax. Of course, there are benefits, but look at what is set for the next 5 years. That's what we need to look at, and that is where I think maybe the market is recognizing that. So you would be able to elaborate in the course of the conversation. 3 things stood out for me. One, very clearly, the agenda to create jobs. That's the top priority, not just now, over the next few years. Once you focus on creating jobs, your consumption will continue to grow. So in any case, we are going to be a consumption-led growth. And the message here is very clear. The Capex has not been increased from 11.1 lakh crore. That's not been increased. All the focus is on jobs. The other focus is on welfare schemes. As far as jobs are concerned, there is a shift in strategy. In the past, you will say that I'll build a road, I'll create jobs. Now it's different. You are giving incentives to employers. Perhaps I think in recent years, Sajid might allude to this, we have never heard of incentives to employers for job creation. So that's a big shift. And then the welfare schemes that are being evolved are based on asset generation model. So these 2 things will help sustain the growth. For us, sustaining growth is going to be important. All the other things will follow later.
Okay. Now, we'll make this freewheeling, so everybody can come in whenever they want. But, okay, Samina, to you, what stood out for you?
I think this is the very first time, Neeraj, the economic survey was rightfully reflected in the budget. So it wasn't 2 different tales in so many words. Fiscal consolidation, the fact that they're going to be disciplined about this and do better than what they'd initially promised is a huge positive. Apart from that, I think the fact that they've kept the Capex number unchanged, it's a direct message to the private sector saying it's now your time to do your job. We've done what we had to. It's now time that you play ball. And I think that stands out. So while employment is very, very important, the onus will be back on the private sector to do what's needed most, which is Capex, hire more people, build the manufacturing. And I think one last one is the commitment to simplify the tax code. Again, a big standout, because if you've got to draw an FDI, we have to have a simple tax code. While the rates could have been tinkered with, simplification is a key positive.
Yeah, and I think in some sense, one good thing was that we know that the top 30 or the top 100 or 200 firms are doing the Capex, which they have, green energy, etc. The bottom rung, the MSMEs are not. And in some sense, this ability to tell smaller companies that we are giving you incentives for employment, so on and so forth, let's see if that brings about some bit of capacity build-up or Capex at that end, because that has thus far clearly been missing. Tamanna, your take.
That's exactly the point, right? The capacity building or the job growth is going to come in from the MSMEs and the mid-cap kind of companies, and not from the top companies here. Now the question is that whether they have that incentive to pick up that Capex and go ahead. Do they have the capital to do that? That's the thing which we need to see now.
Also, just to add to that list, even Gift City, we didn't talk about this very much, but Gift City has been very significant to the government in order to bring all that foreign money in and localize everything. So creating jobs, pushing for growth, that could be an impetus for Gift City to go out there and hire people and expand that offering that is there.
Yeah, and there are points around the foreign companies as well, and we'll get to that. But Tamanna, yeah, the tax changes, but your initial take, Tamanna.
Okay, so I would say, and a bit of taking this opportunity to crow a bit about NDTV Profits coverage, but if you had watched us in the run-up to the budget, a lot of what our experts said, a lot of what we said has come on those lines. And why am I saying that? So Manish Sabarwal, for example, when we talk about employment, and that's one of the foremost voices, comes and says that if you want to really create jobs, don't focus on those looking for jobs, focus on those giving the jobs. And if you look at what they've done in this budget, I will incentivize you if you hire more people. Correct. I will give you a subsidy on their PF. Okay, you have to hire interns for 12 months, pay 10% out of your CSR. I'm making it easier for you to give jobs. The other thing that we said, that any tax relief will come on the new tax regime. The Section 80C dreams we should forget about. And that's exactly what has happened. We also said that there will not be populist measures towards the rural economy as is being expected. And look at what they've talked about. They've talked about incentivizing farmers to have climate-resistant crops, more R&D, etc. No huge outlays like were expected. I think the joker in the pack really, and which was something that we'd also said, was on capital gains tax. The long-term capital gains tax is going to pinch. The exact impact of it will be known in the next couple of days, whether it's on fixed assets like real estate, gold. The markets, in my view, will be fine. They will get a bit of a hit initially, but they'll learn to live with it because people have made money. So if you have to pay a little more in terms of tax, it's okay. It's something that will be swallowed and tolerated.
On the capital gains front, my view is that the promoters who are coming out with IPOs are not going to put in their shares in the IPOs now. They will wait for the stock to list before they exit the stock. Because the fact is that the indexation, the grandfathering which was available for unlisted stocks have been removed. So basically what happened in 2018 was that there was a grandfathering on the price at that point in time, and many of the unlisted companies were using that as one of the clause for to get a lower capital gains. Now that has been removed, which basically means that now they are taxed at full rate, which 20% for long term and 30% for long.
Private equity, which has been aggressively selling out, will now stay in.
You'll stay in till the.
So that's actually a good thing, right? Because
but then you have a lot of block deals and other stuff coming in because they will exit after.
But Sajid, this was for 2018, so private equity which has come in post 2018 doesn't have this benefit effectively.
Anyway,
you're talking about promoters who own the equity in the company before 2018, not incentivized to
So maybe venture capitalists, right? Not even that much late stage private.
There are hardly
a lot of companies now get listed after 3 years or 4 years of operations. So all of those don't, but the
Neeraj, it's the pre-IPO phase anyway is not counted here. Yes. Private equity still comes in 3 to 4 years anyway out before a listing, right?
Exactly.
Also, just to quantify that capital gains increase, and Sunil Singhania said this, and I think there's merit in it. He said, first, if you were gunning for 15% returns on your portfolio, by increasing your capital gains from 10 to 12.5, the impact of that is 35 basis points on your returns. So now instead of saying I'll stay invested till I make 15%, my goalpost is 15.35%. So of course that's simplifying it too much.
On short term also there's a bump up.
Then that's the trader's money any which ways. It's not sticky.
Absolutely. I'll tell you my problem. Sorry, just one point here. I'll tell you the problem with this taxation. One, very simplistically, 12.5 is not a rounded number. I think in the first year of the budget, they have not come out and said, okay, we are doing it X% and Y%. Now this is the tax for the next 5 years. It is open. As of now, no comment about whether this is the end of it.
Yes.
I think the market may, in its wisdom, believe that this is a start. We do not know where it will end. I mean, for all the talk of tax and tariff predictability and continuity, this is the missing piece. I hope at some point of time in an interview, they clarify about whether this is it for the next 5 years or could there be more, because you don't want uncertainty. Even if they've done this, it would have been great if they had come and said it's 12.5 and 20, and for the next 4 years, we don't foresee any increase. At least there is some predictability. In this case, that predictability about taxation regime on capital gains is missing. I wish that comes in.
But Neeraj, to be fair, when the last time we tinkered on capital gains, we never said it's going to be there for 5 years.
Yeah.
So it was there.
So stable.
No government will do that. Once you do that, you keep it for a longer period of time to assess how the capital gains
the
is
reason
working.
why this time it's important, sorry, I'll just spend 30 seconds more here. The reason why this is important, because now the market in wisdom might want to believe that they want parity between all asset classes.
Exactly.
And equity taxation is still lower than some of the others. So will the market now fear that a higher tax is around the corner? Could it impact global investments? That's the only...
No, I would like to answer this question. I would like to answer this question.
Just before that, Melissa, while that could be a fear, let's not forget that the markets were down 400 points when these announcements were coming through. But we've gone home with a 30-point cut on the index. Even though the breadth of the market was weak, we've taken it in our stride, at least for today.
No, so the 12.5%, Samina, is that it's part of the rationalization, because you were taxing capital gains on the basis of different asset classes, something for property, something for gold, something else for debt. That was done last year or the year before. They rationalized that one. So this is part of the rationalization. That 12.5 is your bench. Now from there, like, it's 12.5 for everything. Indexation is gone. So they have to rationalize that part. And somewhere I think STT will also be kind of rationalized.
My question is, on FNO, there was a huge scare. What has come is this STT tweak. My question is this just the beginning? Are they done with are they done with their attempts to curb the large volumes coming into quote-unquote speculative trade?
No.
The consensus is no on this table?
Seems to be
Consensus, the markets may be sharing STT today. The reason being that the finance minister hasn't converted gains from FNO as a speculative income, and so it will be charged to your
so not as bad as you would expect.
Not as bad as expected.
But that is still at the highest
tax
bracket.
If you end up paying 1,000 rupees more,
why speculative income is taxed at the highest tax bracket anyway?
It's not been categorized, right? Trading from FNO is not being categorized.
No, it's business income.
It's business income.
Categorized as business income, which is your highest tax.
But that's the highest tax.
Yeah, but it's one of the things which market was expecting is emphatic increase in that taxation rate.
How can they do it?
Categorization which was there. But point is that if you look at the breakup of the turnover of STT, it's the proprietary traders who are the biggest traders in this market. And the impact for them is hardly any in that sense.
So no impact there. Okay.
Because retail is not going to go away because just STT has gone up. There is hardly any.
Fair call. Okay. Now, before I give my take, Sajid, your quick take.
My entire thing was that there should have been an increase in Capex from 11.1 lakh odd crores, because there was a fiscal room available for them to increase it. Unfortunately,
we have taken that.
Cost of the glide path
was used to convince and take care of Andhra Pradesh and Bihar and Orissa.
Can the
Andhra
economy
Pradesh, Bihar and Orissa is not been funded from the budget. It's multilateral loans which they are going to do it. So it's not the budget which is funding.
So where is that additional 1,000
That's a small number. That's a small number.
15,000 crores is going to Andhra Pradesh from the budget.
But that's a small
Bihar
number.
flood relief, all
everything
but that is to multilateral agencies.
No, but all the expressway projects will come from the budget.
The NHAI budget anyway.
And rebuild the bridges which crashed.
That's the tax buoyancy which is helping you, right? To 4.9.
Maybe it comes at the offset
I'll give you an example.
divestment receipts not coming in.
STT collections were expected at 36,000 crores for this FY25.
Where is the money, Sajid?
The money is here, right, in STT.
No, but that's not the point, Sajid. Sorry, just the counter to your point though. There are 8 months left in this fiscal. Don't look at the percentage, but the absolute number of capex announced in the interim budget was fairly high. You couldn't do anything because of Achar Sanhita. How will the economy absorb so much of capital in 8 months? I don't think the Indian economy is primed to absorb so much.
Private sector is
to step in now.
Private sector is already doing it.
It's not happening to
some
that
point
extent.
Yeah, so at some point of the private sector needs to do it, because how long can the government do? Any choice? It's debatable, but this is one point. What else is your top take?
The other thing was the tax buoyancy. I think they have taken a very conservative approach with respect to tax revenue collections, which is there. I believe that there is much more buoyancy there, and that could have been used for
It's
more.
good to be conservative.
It could be. It could be. You can say that, but then you can use it somewhere else as well.
Maybe they will use it if the money comes in. Okay, fair call. Just very quickly, my take. I mean, one thing that stood out. I mean, I just like the fact that while the going is good, they have gone ahead and done a 4.9 number on the fiscal deficit, because one doesn't know if the economy slows down, whether they have enough ammo to move from a 5.1 to 4.5 in FY26 versus moving from 4.9 to 4.5. Because remember, when S&P changed its outlook, S&P mentioned that the state plus central should be 7. We know state is usually 3.5. So the central needs to move to 4%. So they need to show that glide path. They have done it 4.9 admirably now. Go to 4.5 presumably, and then cite 4%.
Let me give you the other side of that equation. If state plus center has to be 7, center is becoming more conservative, because a lot of states will have to be spending ahead of two crucial elections, Maharashtra and Haryana, and state governments are with the same party. So, you have to give yourself some room. States will have to be spending all of your schemes to help farmers, subventions, a lot of that. Ladla Beti, Ladla Beta, all of that is coming on the state government's books.
Yes.
And you have to make room for that. So maybe that big
major
picture.
reforms which we are missing is land and labor.
Yeah,
Labor is yet to be notified, but
fast.
labor is yet to be, both the state subjects, but they're linking the land reforms to the central grants, which is very good thing, because we saw that what happened to power sector, right? Means the discoms were not paying, were not getting the money, and distribution companies, the first right of money went to them, and so if you're going to link your capex cycle to land reforms and the labor reforms, there is a chance that in next 3 years you're going to achieve these things, and digitization of land and a better data pool of labor is going to be a big asset going forward.
Maybe off budget items, but who knows? Let's see. Anything else, guys?
I want to ask Neeraj a question. Two-part questions. Why did the market fall initially, recover and close flat, except for some sectors? Part number one. Part number two, how will the markets behave tomorrow when you go back, read the fine print, understand each sectors? So will the action be very sector specific and stock specific tomorrow? What is your take?
I made 2 or 3 phone calls after I got off air. The sense that, and it's a limited sense that people in the markets have, but the sense that I got is that the capital gains uptick was disappointing and there is an uncertainty there. Do we see a bit of a reaction in the days to come and not just tomorrow? Very likely. Is it a certainty? No. A lot of people talking about how the quantum of cash that domestic mutual funds were sitting on, and it will be interesting to see the buying figure today, that may have brought it. I doubt that mutual funds would buy into the market just on a 1% or 1.5% downtick. So I think that side of the equation need not necessarily be true. Remember, we've been falling for Friday, Monday, Tuesday we fell, so it's 3 days of a fall. Some bit of short covering might also have happened. Be important to look at the cues today evening, both the institutional number that come in and the derivative action that has happened, to try and figure out. But is it the end of the road? I think most people said they would want to wait and watch. They are not able to predict right now whether the markets will necessarily go down tomorrow or not.
Historically, I think the belief is it's back to business. That budget euphoria or disappointment is only for the
I guess Bajaj Finance is not.
People are relieved the budget is over. You can get back to the nitty-gritties, and because that's the theme right now. It's a graze from the ear, not a shot in the head. since we are in that stage, it's not a complete assassination of the FNO kind of euphoria. It's just a graze to the ear, and maybe that's something that will be digested. Markets will come up with their fists raised high to get that.
Cross fingers for that.
Trump Trump reference.
But guys, we
if
have
any.
4 minutes or 5 minutes left. Anything else that stood out? Anybody? Very quickly. Let's make this quick now.
I have just one take on Nirmala Sitharaman, okay? Because when she came in as finance minister after the late Arun Jaitley, passed away, and this is just something I've seen chatter. She was initially underestimated. A lot of people on Twitter, love to take on her. Consistently performed on the 2 or 3 key things that finance ministers are judged on. Are you tightening your belt on fiscal glide path even during COVID? Did not let things go out of whack. No free hand on giving away freebies which will wreck the balance sheet. Been very, very conservative, clear-headed, no nonsense, and has not had to roll back too much, which in the history of Indian budgets is something that happens all the time. So a word here, even after these elections, it was being speculated, will Nirmala Sitharaman get the finance portfolio again? Will there be other contenders? She's been, I would say, the dark horse in this race who has emerged very, very strong with a solid track record.
And I don't think anybody will contend with also. The one time that she had to roll back, she did it very immediately without any kind of issues. So I think no contention out there on how well the FM has performed. Really, full marks to her.
Yeah, no, I have a point to add. See, the overall budget philosophy, we came to know, our viewers, network viewers, NDTV network viewers came to know from the Prime Minister when he gave an interview to our Editor-in-Chief, Sanjay Pugalia, very clearly, these 5 key priority areas. He said, this is what I'm going to focus, and the budget is focusing, apart from all the other changes that have happened, farmers, jobs, welfare schemes, uplifting poverty, MSMEs, and women, and state competitive federalism. So she is focused on all those 5 areas. Now, it's a question of implementing them over 5 years. So just to remind the viewers that the PM's interview to NDTV network highlighted all these things.
Yeah, and I think it's an important point that it's a 5-year piece. But anyways, we can go on with this. Samina, Sajid, any last points? Anything else?
I think from a personal taxation front, I think people would be happy that, okay,
Section 80C deserved a little bit more lease of life, but that's clearly not
maybe she wants you to go to the new tax regime.
And even on women, I must say, on women, there's a request to states to make it easier for women to buy properties. That's pretty much. It's a request.
Some
to
of the states already have a lower stamp duty for
asking
women.
States to do it. So nothing really.
Buy properties but don't sell.
There's nothing really. Nothing really as of today. Nothing really today as for women.
Yeah, what was missing? I thought just one last point from mine. I think in the interim budget they had made this very interesting thing, and I missed it maybe, but they had made this very interesting provision or mention about 1 lakh crore for research, because R&D activities need to step up. I was hoping something would be mentioned around that.
She's retained it, I think. But I think, tough for investors, good for jobs, good for employment, good for the young, and good for political priorities as well in some ways.
Didn't give
done very well.
Didn't give too much to allies.
Done very well.
Too much to allies either, kept them all happy. They can go back to their constitutions and say that, Andhra Pradesh and Bihar got what they deserved, but hasn't given too much away.
Got a lot.
I'm talking in terms of allies, but of course, Northeast, Odisha.
It was just high on headline value, like.
But I mean, which is great. A budget shouldn't essentially be necessarily a market moving or economy moving event. It should be a statement of accounts, and I think in that sense, this has turned out very well, save for people who will look at taxes because there are a lot of changes there. But, well, that's it on this edition of the Editor's Cut. We hope you found it useful. Thanks so much for tuning in. You can mention in the topics comment segment what did you feel about this. And remember, stay tuned to NDTV Profit for more news and updates today evening, as well as tomorrow morning, a power pack lineup to take you through the finer points of what the union budget had to dish out for the economy and for the investing fraternity.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
All you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hi, thanks so much for joining in. You're watching NDTV Profit and my name is Alex Matthew. This is a special broadcast on Budget Day to help you understand the changes to the tax laws that affect you, the individual taxpayer. And there were a whole host of announcements that were specifically aimed at you this time around. And by the way, if you've got questions related to anything that we speak about over the course of the next half an hour or so, I'd encourage you to send them to us on any of our social media platforms. My guest today, who are going to help you understand everything that has changed from this year onwards, is Sameer Kanabar, tax partner at EY in the studio, Puneet Shah, partner at Dhruva Advisors, who's joining in remotely, as well as Arvind Rao, the founder of Arvind Rao and Associates. Thank you so much, gentlemen, for taking the time. And the intention, of course, of this show, as I pointed out, is to help our viewers understand everything that has gone down. But before we start, let's talk about who this is affecting, because it is affecting two cohorts primarily. We're talking about individual taxpayers, and there are several changes that have been announced to the new tax regime to incentivize it further. And there's also changes that affect the investor. So that's the second cohort that we will be speaking about. Speaking about the first set, let's first listen into the specific portion of this budget speech today that related to individual taxpayers. Here's what Finance Minister Nirmala Sitharaman had to say.
I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually.
All right, so that was the Finance Minister listing out the major changes in the tax slabs. She also said today, in case you missed it, that 2/3 of individual investors have transitioned to the new tax regime. Sameer Kanabar, to you first. Let's talk about the major change. Is it going to drastically change what taxpayers do? Will the remaining third also start moving to the new tax regime?
Yeah, so of course the idea is to see how we can sunset or transition out the old tax regime, because we can't be living with both the tax regimes. And hence, since last couple of years, we are seeing those changes coming in. Idea is to see how people can move into the new tax regime, make them more attractive and phase out all deductions, as has happened even in corporates where all deductions or exemptions have been phased out.
So that's going to happen in your opinion?
If we look at the current incentives available to people below 10 lakhs or maybe even in the band of 8 to 10 lakhs, the HRA, the deduction for interest for housing, etc., the old regime is still beneficial, right? And more likely they are still likely to continue with the old regime, because at that band, every rupee saved is important for the class. So yes, people may not move, and of course, while 2/3 have already moved, we will have to just see how people want to make investments in other class of assets and not be forced to make investment in a given class, and thereby switch to the new regime.
That's a fair point. Puneet, coming to you next, what did you make of these changes? A lot has been said in the run-up to the budget, the desire of the middle class taxpayer to get a bit of a relief. Do you think that this is that relief?
I don't think so. I think the amendments are quite few and far between. Much more was expected. For example, the slabs which are tinkered in the new regime is very, very less. I mean, the saving of 17,500 rupees is actually very less as compared to what was desired or what was expected. The slabs are changed by 1 lakh rupee at every level without changing the rates of taxes. So I think the relief is quite marginal to my mind. Number one. Number two, if you look at the deductions, like a standard deduction, which is only deduction available under the new regime, is now increased from 50 to 75,000. It's a welcome change. It's a welcome increase. However, to my mind, not sufficient, considering that 50,000 was set up maybe a decade back, years back. So I think the expectation was at least trans deduction to increase to 1 lakh rupee. And similarly, as Sameer mentioned, the taxpayers, the individual taxpayer will still compare the deductions which are available under old regimes, such as HRA or interest on borrowings for the house property. And if those deductions are substantial, clearly they will continue to opt for the old regime.
You know, that's an operating point there. And in fact, it's perfect because we were discussing, Arvind, earlier on in the day, and you drew up an Excel sheet where you were talking about various scenarios. And of course, it differs from person to person depending on what they're investing in, what they're claiming. But there is a threshold beyond which the old tax regime still becomes more beneficial. Could you spell that out for us?
Yes. So before the slabs were increased today, if you look at assessment year 24-25 new regime tax rates, some brief calculations mention that as long as the total deduction that an assessee is claiming is in the range of say 3 to 3.5 lakh of rupees, or anything up to 3.5 lakh of rupees, the new regime favors better. But the moment the deductions, which could mean the HRA, the ATC, the ATD, NPS, everything, all these put together, if the moment they cross this 3.5 lakh per annum threshold, then for taxpayers, say even the middle class taxpayers, the old regime looks better.
Yeah, okay, that's a fair point. You know, by the way, and I hope that I will be able to pull this up at some point over the course of this conversation. The finance minister was asked this question specifically at a press conference about whether or not this is one of the steps that is being taken to finally get done with the old tax regime, whether there will be a sunset on this. And she said that this is being reviewed, that the changes to the new tax regime are in order to make the tax regime simpler. But she said that we still can't comment on whether or not this is the final death knell for the old tax regime. And the point that you're taking is well taken, Arvind, with regard to the benefits still available on the old tax regime. There were a couple of other changes as well, and specifically on NPS, and this affects quite a few people, so let's talk about it. Samir, previously deductions available by the employer's contribution to the National Pension Scheme, a lot of government employees benefit from this. It's been raised to 10% to 14%. There's a significant change there?
Yeah, and just one point on the previous slabs, that while the benefit projected 17,500 is actually 15 lakhs and above.
Yeah.
It is not getting translated at lower slabs.
We did a back of the envelope calculation. We said if you're earning up to 10 lakh rupees, the benefit is 10,000 rupees, right?
Absolutely. So if you look at 3 to 7 lakh slab, up to 3, of course, exempt, 3 to 7, the benefit is just 2,500.
Yes.
Which is basically 25,000 ka 10% kind of. So obviously, while what is being projected as benefit is not getting translated, it is only people in the higher bracket will get benefited under new regime, and that is why probably the recent statistics which has been put up, interestingly, on the website is to say that earlier 1/3 people were above 5 lakh bracket in terms of tax return filers. Now there are 50% people above 5 lakh bracket. So the 2/3 ratio probably that is coming in is because a lot of people are moving into higher tax brackets, and that's why opting. Whereas 1/3 are still in the lower tax bracket. Probably that's an interpretation. But coming back to NPS, so 10 to 14%, again, it is employer's contribution. So whatever employer contributes, extra 4% will now no longer get taxed and will be treated as exempt. And the way it works is that, this 14%, so if my salary is 100, if 14% is contributed, actually I say my salary is 86, it's not my 100, because that's how the way it gets calculated. So everything is then based on that. But obviously, any extra contribution above that, which is above 7.5 lakh rupees, up to 7.5 lakh, there is no impact. But above 7.5 lakh rupees, the interest gets taxed, not only the higher incremental amount, but interest gets taxed on an accrual basis.
Sure.
So that's the impact.
So that's a fair point. But it's still beneficial to the extent of that 4 percentage point increase in contribution, as long as you stay within that threshold. One more change that I will talk about with regard to the individual taxpayer before we talk about capital gains and the rationalization of capital gains tax. Arvind, we were talking about this earlier, and this has to do with the tax collected at source for transactions made in the liberalized remittance scheme. And you can actually set that off against the TDS, or tax deducted at source, if you communicate that to your employer. Can you explain that to us?
Yes. So Alex, while we were discussing this earlier in the day, and we did speak about TCS on LRS, but we also forgot that if you're buying a motor car, there is TCS on that as well. So basically, let me just spell it out. So whenever an individual is remitting money outside of India under the liberalized remittance scheme of RBI, which is up to $2.5 lakh dollars per year that can be remitted out, there is a 20% tax collected at source on this. As long as you are crossing that 7 lakh limit threshold that has been defined per individual. So the moment you're remitting this, there is a TCS collected and paid to the government, which now under the amended amendments in the proposal say that employer can take cognizance of this TCS if the employee declares it to the employer, offset it against the tax liability of the employee for the year, and accordingly deduct lower TDS on the monthly salaries. So the direct benefit out of this is for all those people who are either buying a motor car or sending money outside, if they have suffered TCS, they can disclose it to the employer, and thereby it could mean a little higher in-hand money for them from their salary.
It's a fair point, and it's definitely a benefit because it's not a small amount of TCS that gets collected. It's quite a large amount, and that gives you more spending ability through the year if you communicate it to your employer. So you should do that. I will come to you, Puneet, about the changes in the capital gains treatment, but we have to slip into a very quick break. We'll be back on the other side to tell you all about that, and this is the second cohort that I'm talking about, the individual investor. Do stay tuned. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching NDTV Profit, and we've so far spoken about the changes for the individual taxpayer. Let's also talk about the retail investor and how your lives changed from today onwards. In fact, let's listen into what the Finance Minister had to say about the rationalization of the treatment of capital gains.
Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term.
Okay, so a complaint that tax experts and indeed several investors had for many years is that the treatment of various assets when it came to capital gains and taxation of capital gains was very different. Equity was 1 year for long-term capital gains, real estate was 2 years, gold as well as certain other assets were taxed as long-term capital gains if held beyond 3 years. Now that's been simplified. Puneet, I'm coming to you hopefully for a further clarification as to what constitutes financial assets, what constitutes unlisted assets and non-financial assets.
Yeah, sure. I think this is the single most important amendment made by the finance minister, and I think it was overdue. There has been long pending demand in terms of rationalization of the capital gains tax regime. And as you rightly said, there is a multiple rates, multiple holding period for different assets, financial assets, non-financial assets, indexation available, no indexation available. So several issues in the regime, and I think a good attempt has been made to rationalize or to simplify the capital gains tax regime. If I were to just summarize, listed is 12 months so far as the long-term capital gain is concerned. Anything below 12 months would be short-term capital gain for the listed securities. That includes debentures as well as shares. As so far as unlisted is concerned and all other assets are concerned, it would be 24 months. So now the 36 months period has gone away. So that's easy. It's 12 months or 24 months. So far as the rate of tax is concerned, again, there are only two rates, actually three rates. One is 12.5% for long-term capital gains on all assets, whether it is financial assets or non-financial assets. A very bold step taken, all assets treated at par, whether they are financial or non-financial assets. The rate of tax for long-term is 12.5%. Remember, the finance minister has removed indexation benefit. Again, a very important measure, and maybe rightly so, because the rate of tax for several long-term assets are reduced from 20% to 12.5%, unlisted stocks or property or whatever, right? So indexation benefit has been removed. So it's 12.5% without indexation benefit. So far as short-term assets are concerned, it is applicable, the rates will be applicable at the slab rates. Applicable slab rates, taxes will be paid except the listed equity, where the rate of tax is increased from 15% to 20%. So for listed equity, the rates have gone up from 10 to 12.5 and from 15 to 20, while for unlisted, it has come down from 20 to 12.5, so far as long-term is concerned. So it's a mixed bag in that sense. Maybe depending on your asset class, it will be either beneficial to you or it would be, or you will have a higher tax impact. So there is one specific class, sorry, just to complete, yes. There is one specific class, which is, as we call section 50AA, which are specified mutual funds or market-linked debentures, where irrespective of the holding period, whether it is 12 months, 24 months, it would be considered to be short-term capital asset, and the rate of tax would be on a slab rate basis. So that's asset class which is like unlisted debentures, etc., are also now included in that.
Yeah.
and the higher rate of tax has been provided in that.
And that doesn't change. The change to the treatment of debt mutual funds was done a couple of budgets back, and that remains to be the case.
Sorry to add, they have just changed the definition.
Yeah.
Earlier it was like 35%, less than 35% to equity. Now they've aligned it with other equity-oriented mutual fund definition to make it 65%. So I think that rationalization was also, I think it's a step in a right direction.
Absolutely. Let's delve a little deeper into this indexation piece, because there might have been some misconceptions about whether or not this ultimately is beneficial or harmful. And we've done some calculations looking at the inflation. So first of all, if you don't understand this, the indexation benefit is what allows you to set off the impact of inflation against the capital gains that you're making on a particular asset. So just to put things very simply, if you bought a house in 2005 worth 1 crore rupees, and if the value of that house is now 2 crore rupees, you've made a gain of 1 crore rupees. You have to look at the impact of inflation between 2005 and 2024, set that off against the capital gains that you're making, and then pay 20% on the remainder. That is being done away with. So you would probably be thinking that that's negative. But the reality is that it may not be. In fact, in most cases, it's either neutral or positive.
Positive, yeah. No, you're right. And if we look at least the immovable property, at least the back of the envelope calculation seems to suggest that if you're holding property since 2003 and later on, then the new amended rate of 12.5% as a long-term capital gain is more beneficial than the indexation that you are getting it. And obviously the indexation benefit started from 2001.
Yes, that's a base year.
Yeah, that's a base year. So it's hardly you lose out anything. So from that perspective, if you have recently bought property, 2012, 2015, whatever, and if it is long-term and you're selling it, obviously this is going to be leaving more money in your pocket in terms of taxes in case you are selling it. And obviously, of course, you have a corresponding exemption if you're buying another house.
Yes,
so,
that remains.
Yeah.
Okay, so very quickly, that last point that I wanted to talk about, there has been a difference between the treatment of dividends as well as buybacks. And this was clarified today. There was a change that was announced, and the buybacks that you participate in. So suppose you have equity shares of a company and you participate in the buyback that a company is announced, and you sell shares in the buyback, that is now taxable in your hands. But there is a clarification. We earlier thought that this would be capital gains tax, but it is not capital gains tax. Samir, can you explain that?
Yeah, so buyback again flip-flop. Earlier buyback for listed shares was capital gains, then buyback tax was only applicable for unlisted, then they brought in buyback tax for listed, where the company used to pay buyback tax on the differential value of the buyback minus the price at which the shares were issued, which was being paid as at the rate of 21% by the company. Now a flip-flop to say that effective 1st October, so this is effective 1st October, unlike the indexation and all of that which are effective today.
Yeah.
So with effect from 1st October, the buyback will be taxable first, not in the hands of company but in the hands of shareholders. Second, this will be treated as kind of dividend income, taxed as income from other sources. So it will get taxed as per the slab rates. And the cost that you have incurred to buy those shares. So for example, you bought the shares at IPO or at a face value 10 rupees, and say you have 10 shares, so your cost is 100. So 100 effectively becomes your loss, which is available to be offset against your capital gains. So in the same year, if you have any capital gain, you can offset the cost being resulting into loss against the capital gain, or you can carry forward.
And whatever you gain, net of that loss, is what you pay based on slab rate.
So one is, of course, the buyback value that you have realized is taxed as slab rate as per your slabs. The capital gain will get taxed as capital gain because that is the stock that you have sold on the market. So that is capital gains and you're offsetting. And then there is a gain, you pay 12.5% long term, 20% short term.
Okay, so all of this, some of this, I shouldn't say all of this, because I think my guests today have done an incredible job explaining sometimes what is quite complicated. I must thank all of you. Thank you so much for joining in and for answering all the questions that I had. And I'm sure if my viewers have more questions, you will be amenable to answering them later. Of course, we will take them up over the course of today as well as in the coming days as well. Thank you so much for tuning in. There's lots more coming up over the course of this evening. And this is NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Hello and welcome to NDTV Profit. You're watching a special budget coverage program that we've prepared for you. I am Vishwanath Nair and I am joined by Mr. Dinesh Khara, the chairman at State Bank of India. Mr. Khara, welcome. I know you've had a long day. Certainly most people who have been tracking the budget have. But I just wanted to start off this entire conversation with your views on what exactly transpired this morning. How are you seeing the budget play out?
Well, I think as far as the budget is concerned, it's quite an inclusive budget with a very clear focus in terms of the rural and also in terms of MSME, and as well as when it comes to, there is a very sharp focus in terms of building the skills in the country, which eventually will go a long way in terms of making this country to be the developed country by the year 2047. The other very important piece is that a very sharp focus on productivity is something which is seen. Agriculture continues to be a major area, and the enablers are being provided in the agriculture sector. DPI is being created for the agriculture sector so that all such agri lands could be digitally tagged, and which will actually facilitate availing the loans for our rural customers. Likewise, when it comes to MSME, manufacturing and services, thresholds being lowered for the TREDs. Many more entities will come into the TREDs. Almost 22 new public sector entities will also be participating on the TREDs. Apart from that, almost 7,000 new corporates will also be participating on the TREDs, which will actually ease out the problem relating to receivable finance by the MSMEs. Some kind of announcement which have come in for the CGTMSC guarantee, and also for when it comes to the SMAs and how should we deal with the SMA. These announcements will go a long way in terms of encouraging MSME in the economy. So that's how I really read the budget. And in addition to that, the focus on climate finance, renewable energy, PM Surya and the PMAY. These are some of the other initiatives which will go a long way in terms of creating enabling situation for the growth of the economy overall.
Right. Mr. Kharab, one of the questions that I had was with regard to the MSME announcement. Now, you've spoken a little bit about what the government is trying to do here. But with this credit guarantee scheme, now we saw right after COVID that credit guarantee scheme really supported the MSME sector as well as some of the other borrowers to try and stabilize the business, be able to access financing much easier. Do you think that going forward, that's probably going to be the trend that your public sector peers and yourself, as well as some of the private sector peers out there, will probably extend more credit to the MSMEs?
No, I think this is the kind of effort which is there. When it comes to this MSME guarantee scheme is there, this is what seems to be the intention. Because what you mentioned about the COVID and around that time, the portfolio level stop loss, the first loss guarantee which was given, it actually encouraged banks to lend and support the MSME at a very crucial time. So perhaps encouraged by that, this is what is being envisaged. And I'm quite hopeful that it will certainly give the boost to the MSME lending.
In terms of the announcements with regard to large infra projects, especially in states like in Andhra Pradesh as well as Bihar and some of the other eastern states as well, so there is a focus on building that segment of the country. Do you think that opens up doors for banks such as yourself to go out and fund these kind of projects?
No, of course, this much of it would have to be seen in the context of the nature of the project, but nevertheless, such infrastructure projects are always of interest as far as we are concerned, though we evaluate them and see to it that it should suit our risk appetite. But nevertheless, we do look at these projects as quite promising, and opportunity of growth in the economy actually goes up, because our sense is that infrastructure has